Apparently, there's a new uranium report that's just come out, and it only comes out every 2 years. SPUT is still trading at a discount, though, discount to NAV, that is. There's an ETF rebalancing coming soon. The spot market is doing interesting stuff, and so is China, by the way. And we just had what people call an end of the month smash. And I also want to talk to you about copper here, John, not only the uranium spot market, that will be a big part of the conversation, hopefully. But after our conversation, I also have two copper companies, by the way, for people listening. So there's going to be one early stage Explorer Co. There's going to be one advanced stage copper development company for the CEO barbecue part of this episode. It is the timestamps on your screen, but also you can use the timestamps on YouTube to navigate the video. But yes, another long energy transition talks episode this week, but nobody wants to hear me, John. We want to hear you. And I'll start with uranium, then we'll move into copper. But emotions are high out there. Not everyone's happy, and for a good reason too, I suppose, right? But what about you? What are you seeing right now? Are you happy? What are you paying attention to? What are you thinking about under the shower? Talk to me.
Yeah, well, thanks for having me back. It's always good to chat
Pleasure.
with you. I think the most important thing to focus on and what the market's really been dealing with is just this news air pocket or news drought that we've had up until just Friday of last week, and that really weighed on sentiment. And this, I'm going to say, has happened 3 summers in a row. So I don't know if that's a seasonal trend that's forming. But we had the same thing happen in 2022 when things were very quiet over the summer. Everyone was kind of scratching their heads. The Uranium Trust was trading at a double-digit percentage discount. And then, bam, out of nowhere, I remember it very, very vividly on, I think, August 24th, the Japanese said they were going to accelerate restarts, and then the market kind of took off. Last year, I would say it was even more pronounced with sentiment really being washed out. And sure enough, right before WNA, which is coming up in about a week, Cameco announced they were having production issues and issues at the mill. And the WNA put out their new forecast that showed uranium demand being way more robust going out to 2040 than previously expected. And it was, game on again. This summer, same thing. We've had kind of a news drought, and it was really a news uncertainty driven by the Kazakhs and what is really going on there. The messaging from the company, I would say since last October, has been very mixed in terms of we're going to expand production in a meaningful way in 2024 and 2025. Then January, they admitted that they're not going to be able to do that. And we won't tell you until August. And everybody was waiting and sitting on their hands between, January and August to what's really going on there. I listened to that call. I reviewed the presentation, and I think it confirmed what we believed for many months, is that their ability and or willingness to expand production in a meaningful way is just not happening. And I think that's important because everyone has been so focused on whether the world's largest producer was going to basically flood the market with uranium. And that just doesn't seem to be happening. And that overhang, I think, is lifted. That is obviously, I think, going to improve sentiment. And more importantly, I think it will be a very important wake-up call for these utilities who have also been sitting on their hands. And we'll talk about the data points that reaffirm that. But they've been sitting on their hands, and I think it should be a wake-up call, as I said, to utilities that security supply should really be paramount for them, because it is not going to be easy to bring a lot of meaningful production to market over the next, what we think, 4 to 5 years. And that's really the crunch time for this, structural supply deficit that is still in place.
Hmm. Do you think that the Kazatomprom 18% reduction puts them anywhere realistically? Like, is the number that they gave us of how much uranium they want to produce, is it realistic even after the cut? Like, are they going to meet that production profile?
Yeah, well, I think it's important to start off by saying that for the last 5 years, and that includes 2025, so it's not the last five, but for 5 years now, the Kazakhs have not met their production target. So that includes the last 3 this year and next. And so there is an ongoing issue there, obviously, with sulfuric acid and some delays with construction. They even commented about bureaucracy and permitting, which I found a little confusing given how strategically important uranium is to the country. They obviously are building new sulfuric acid, a new sulfuric acid plant in country to address some of these issues. But we know the last time they built one of these plants, it took 6 years. Now they're saying it'll take 4 years. So let's give them the benefit of the doubt that, you know, there's some learnings that have been, you know, leveraged. They can leverage some of the learnings from the last construction project. So that I think there's a reasonable chance they hit their production, their lower production guidance, because at the end of the day, it's really not meaningful from what they've produced for the last 3 or 4 years. So let's assume they hit their targets. We're talking about a few million more pounds per year. It's really not material when we're already running a supply deficit that could be 30 million pounds. So does it close the gap a little bit? Yes, but it really is not material. And when you add in all of the other brownfield restarts, they're all chipping in 1 million pounds, 2 million pounds, 3 million pounds, 500,000 pounds. You know, they're all helping, but we're still a long way from closing that gap, which, by the way, is only going to get bigger each year.
What's your personal gauge of the sentiment response being after that, though? Like, are you getting more calls from financial players or even from utilities or fuel buyers or whoever after the announcement?
Well, next week is really going to be telling for us because we have a full week of meetings with institutional investors. And obviously, the conference is really the marquee event each year where all industry participants are there. And I think there's going to be a lot of chatter and discussion amongst industry players about primary supply and what's happening. And obviously, the Kazakh news is really front and center. The Kazakh news is not just about production shortfalls. It's also about the mineral extraction tax going up starting next year. That's going to have an impact. It's also about the all-in sustaining costs that the Kazakhs published last week. They've gone up over 40% year over year. So you have all kinds of cost pressures, whether they're related to labor, sulfuric acid, and the government asking for a bigger cut of the pie, that are all going to push the cost curve for uranium up, which means you either accept lower profitability or you pass those costs on to your end buyer. And we think that's going to happen given the leverage that producers have right now against utilities. We think they're clearly going to pass the costs on. So I think this is going to be very topical, and I'd really like to share some insights with you after the conference, you know, around what people are thinking in light of everything that's gone on in the last few months.
Yeah, that'd be great. We should do an update. We should do an update interview right after that. I remember, though, and I'd be curious to see if that's happened at that conference. I remember you might have told me that in an interview or somebody else the same story, but you were at a nuclear conference, I believe, last year, and you had spoken to a fuel buyer who was under the impression that you or SPUT will sell them your uranium if and when needed. So they told you something along the lines of, oh, they're not stressed or whatever. And of course, you told them that that's not going to happen. That's not what your prospectus says that it will. But has that happened since then? Again, like, have any fuel buyers approached you? Is this still the overall belief in the market that you're eventually going to sell them that?
Yeah, I'm glad you raised it up, that raised this point again, because we've heard rumors over the last couple of weeks that people are chattering again about this idea that we're not worried about in future inventories because Sprott's just going to lend us the material or they're going to sell the material to us. And that is a fantasy. And I don't know why they keep clinging on to this. You know, I call it hope. Hope is not a strategy. We've been telling them for 2.5 years that trust is perpetual in nature. It does not have a mandate to sell its material when some magical price target is reached. That's not the mandate of the fund. Our mandate is to buy as much uranium as we are allowed to under our current regulatory agreement, and that they should go and buy their own uranium. And we've been telling people over and over again. And look, our actions speak to this. We have been running the trust for over 3 years. We have purchased, I don't know, 45 million pounds or whatever we're at of uranium. We have not sold a single pound. We have not lent out a single pound. I've been asked by multiple parties, including utilities, producers, and traders, to loan them material. I've told them each time, not a chance. Our shareholders would revolt. And so they really need to go and find their own uranium. And I don't know why they keep clinging on to this. And again, I'm getting this from very good sources from fuel buyers. People are telling me that fuel buyers are telling them this. So I'm glad you brought it up, because I'm going to really hammer this point home on every interview I do.
Mm. John, you're going to get my video disliked by the utility buyers that are going to be watching this, saying, "Oh God, now I have to actually go digging deeper." So yeah, I understand that's not your prospectus, that's not your mandate, that's not what you want to do, that's not how the vehicle started, that's not how you've marketed it. But prospectuses can change, right? Over time and in dire situations. You're saying it's not going to happen now. Is it also reasonable to believe, and do you feel like you have the power to say, nope, these bonds are like forever not coming out under any circumstances?
Well, as the manager, we do up to a point. So at there is a theoretical scenario by which if somebody wanted to make a takeover bid for the whole vehicle, they could. Now that's not our decision, that's the shareholders' decision. But I can tell you the onus is very high, meaning 2/3 of all the shares outstanding need to vote in favor of such a thing. Now, our belief is that if something like that were to ever happen, and I think the possibility is remote, it would send such a powerful signal to the market that it would immediately send the spot price of uranium up probably $40 a pound. Why? Because you're basically saying a party in the market is short 60 something million pounds of uranium. And I think the price they would have to pay is not $80, the current spot price. People would be like, no, okay, fine. You want it? It's $120, or pick a price. Maybe it's $150 a pound. Again, this is just a hypothetical, scenario I'm throwing at you, but that is a scenario by which, as the manager, we'd have to bring a proposal like that to shareholders to vote on. But I think at that point, investors would think very differently about the scarcity of the material and the value of the material, and it would not be selling it for a very small premium.
I'm going to try and front run the comment section here, because someone in there is going to say, oh, what did you expect him to tell you? The guy's marketing the uranium fund. That's exactly what he's going to tell you. What do you say to that?
Well, look, the prospectus is a very transparent and binding document, and there's a lot of detail in there around what we can and cannot do. Not just the prospectus, but also the declaration of trust that governs the vehicle. And I think, and I'm very proud of this, is that we've been super transparent and available to people since the day we announced this vehicle was coming to market. And I can tell you that other funds in the market don't operate this way. And that was our strategy from day one, because we wanted to educate the market about this thesis. Second of all, this is an opaque market to begin with. So if you're going to be opaque on top of an opaque market, you're not going to basically encourage investment in the sector. So we go out of our way doing these interviews, helping people to understand the uranium market, because it is opaque. A lot of the information is gathered from, on the ground sources. A lot of the information you have to pay for. So, and we obviously are talking to hundreds of institutions around the world each year that are doing work on this thesis. So we try to pass along what we can, obviously confidentially, around what we learned. And that's really been, I think, the key to our success. We came into this knowing there was a structural supply deficit that only could be solved one way. That's great, and that's playing out as we predicted. But our goal is really to focus on what we can control. And a lot of that is on how we manage the fund, how we market the fund. We don't want to be overly promotional arm wavers. There's enough of that in the industry. And we just really talk to people about facts and reality around what we do day to day.
Definitely an opaque market, and that's something I want to talk about as well. There's always the suggestion that there's a manipulation going on that we can talk about as well. But is this still an unknown thesis to people out there in your experience when you go out and pitch it? Or how is the way you're telling the story? How has that changed? And what can you really do to promote it to the next level here?
Yeah, I would say that the story and the thesis is still emerging amongst many larger institutions. I would say every week or two, there's probably an inbound call that we get from a large institution that says, I'm on week 2 of doing my research on uranium. And it's really compelling, and I thought we'd reach out to you to kind of help us fill in the gaps. So we are constantly receiving calls from very large institutions. Asking us to help them through that process. And look, I don't know at the end of the day if they end up investing or not. Sometimes they tell us, sometimes they tell us months later when we meet them in person or have a follow-up call. And listen, there's times where we'll meet somebody for 2 or 3 times and they're like, hey, I really hope they invest. And then you talk to them again and you find out they have 50 million or $100 million in the fund. So it's great. So, that's really the opportunity for us, is to keep finding those institutions and helping them through their investment research process.
Are they also asking you to improve something on your end? Like, is there a way for the SPUT vehicle to become even better, or something that you're working on right now to improve it and then attract more institutional capital here?
Well, look, the number one issue that we have to manage day in and day out is the discount to NAV. We obviously, when we go through these air pockets, the discount can dislocate from the market price can dislocate from NAV. And what we've tried to highlight to people is that when you look at the historical behavior of the trust, yes, the trust can dislocate for 10 or 20 or 30 or 40 or 50 days. But when you look 60 days forward, in many cases, it goes back to NAV. And we've got some interesting case studies that show that in a short period of time, you hit an air pocket or some kind of news event, and you go from NAV to minus 15%. And then 2 months later, you're back to NAV again, and we're back raising capital. So what we tell people is that it should be temporary. Obviously, we can't promise. It's sentiment driven. It's often news driven. And that those opportunities tend to be attractive entry points, particularly for someone that missed the first part of the move. You're talking to institutions sometimes that say, gosh, I wish I'd talked to you 2 years ago. And it's like, yeah, me too. But you know what? The trust is trading at a discount right now. And the uranium price has gone from 106 to 80 this year. So this actually might be an interesting entry point for you. So don't feel so bad that you weren't there at 45. There's still a kind of an interesting opportunity and what we think is a long-term window. Now, why do we remain bullish and convinced? And it's simple. We have not solved the structural supply deficit. And second of all, utilities are not buying as much uranium as they need to. Last year, there was a lot of fanfare around the industry hitting replacement rate contracting. And most people say it's about 150 million pounds reported. And remember, not all pounds contracted are reported because it's a voluntary market. So a lot of people say 150 is around the number. We hit around 160 last year, but people need to make a one-time adjustment to that number. The Ukrainians last year, at the beginning of the year, signed a very large deal over 12 years with Cameco to move their supply arrangement, obviously away from the Russians. That was, and I'm trying to confirm whether it was the full amount with the option or just the base amount. That was 40 million pounds as the base amount, and there was an option to go to 67. So if let's just conservatively say you net out the 40. So now you're at 120. You're not there. What's interesting to us, for the first half of this year, utilities globally have booked 34.7 million pounds. That's half of annual replacement rate. So what are they all waiting for? Well, they're waiting for the price to come down. And the reason for that is because the prices run away from them. And, last year at this time, the price was in the mid 50s per pound. Now we're at $80 a pound. So, and it's not just that. Obviously, I'm quoting the spot price, but the term price has moved up substantially. The term price last year was probably caps of around $80. Now we're talking about 130. So the price has moved a lot in a short period of time. It's clearly caught them off guard. And we believe they're just kind of dragging their feet, hoping that the price will correct. Now, they've been somewhat effective at doing that, but the long-term price isn't correcting. It keeps going up every month. The spot price is corrected because it's largely driven by non-utility buyers and financial players. And with the air pocket and the weakness in sentiment we've had over the last few months, that's taken some air out of the spot market. But we know the spot market can move pretty quickly when capital's starting to move. And we think the back half of the year is going to be better for uranium pricing. And we think contracting is finally going to pick up. The other thing I'll share with you is one of the industry consultants just put out their biannual global uranium fuel report. It only comes out every 2 years. And what was really astonishing to me is they break it down by region. So we looked at uranium equivalent inventories held by US utilities, EU utilities, China, and other utilities. And when you look at the inventories held in pounds in the EU and the US, in 2 years, they've changed by about 2 million apiece, 2 million pounds apiece. That is nothing. That's like 1 to 2%. Now I sit there and I say, well, you know what? A whole lot has happened in the uranium market in 2 years. Everything from the invasion of Ukraine, the sanctions against Russia, Niger coup of the last 12 months shut in production there. And yet their inventories have gone up 1 to 2%. That's mind-boggling to me. Now, who's changed the most in inventory? China. China has increased I'm going to check my sheet here, 86 million pounds in 2 years. 86 million pounds, while the US has gone up 1.5 and the EU 2.2 million pounds. The Chinese have clearly got all the messages and continue to acquire uranium. Now, that's obviously a function of them building 4 to 6 new reactors a year and them planning to build over 100 more. So they continue to buy uranium, but everyone else seems to be holding the line and not really getting back to replacement rate contracting, which I find a head scratcher. So now, if I wrap all this up, it says to us, there's a hell of a lot of pent-up demand building in the system.
I'm glad you're bringing up the Chinese because I'm trying to find something that I read about it. I'm not going to be able to find it right now, but it was. I think that China is selling more EUP to the US, or it has been selling more EUP to the US. Is that something you saw in that report as well? Like, what does that report tell you about China?
Yeah, I've not looked. I'm not sure if it's in there in that report because the report just came out and it's 150 pages. But there was some chatter recently about China, but was selling some to the US. I wouldn't be surprised by that. And the reason is that the Chinese are very opportunistic and they tactically trade. They have a huge inventory. I just quoted you the numbers. Their uranium equivalent in millions of pounds is 609 million, according to this report. 609. The US is 110. So they have a lot of uranium to play with. Now, obviously, most of it is earmarked for future reactor loadings. But, from time to time, they will trade around. And I wouldn't be surprised if they took advantage of record high prices. And especially at a time when there was a lot of uncertainty around the ban against Russian enriched uranium, the waiver process, et cetera. We also do think, in fairness, that utilities, particularly in the US, have been distracted by the ban, it finally becoming implemented, and some confusion around how the waiver process was going to play out because there wasn't guidance originally. What's interesting to us is that the first batch of waivers that have been given out, it seems to us that the Department of Energy seems more flexible around giving waivers for 25 and 26, but after that, it seems a little uncertain in terms of how willing they're going to be. And that doesn't surprise us. That is really the crunch time in terms of waiting for additional capacity to come online. So easier waiver grants, probably for the first 2 years. The back half of this process, this weaning off process, is going to be more challenging.
Correct me if I'm wrong, John, but I heard you say something along the lines or noting that China typically manipulates metals markets on kind of a large scale where it's gold or lithium. They buy a whole lot, then talk the price up or down, and just shenanigans, so to call it. Is that happening with uranium necessarily? Is there any proof that we can see of that?
No, look, I mean, China, when you control very large parts of the supply chain, not production, but obviously the downstream, smelting and refining of these metals, they are large consumers, and these are large cost inputs into their manufacturing base. So they're notorious for when certain metals get too rich, so to speak. They're very good at destocking, where you basically say to the market, look, the price is too high. We're not buying. We've strategically stockpiled material at lower prices. We'll run that down, and that puts pressure on the market. They do this obviously with things like cobalt and copper and lithium. They're doing it right now with gold, where they've been very active in terms of communicating for the last 3 months in a row that the People's Bank of China has not bought any gold after accumulating large amounts of gold for the prior 12 months or so. So, they have that leverage. They use that option. I'm not convinced they're doing that in uranium. They're obviously a huge net buyer. They do have some control of the supply chain, but they don't control the supply chain. So, Kazakhstan is one entity that has enough power, given the OPEC equivalent in uranium, that would be able to influence the price and production. But I don't see the Chinese trying to do that.
I asked that question like that because I wanted to open the door to talking about shenanigans overall, because it seems like once again we're seeing what is it, at least online, it's called the end of the month smash, where the spot price goes down into the end of the month, and not once or twice. I mean, it's happened a lot. I don't want to say it happens every time, but it does happen a lot in my experience. It's happened again now. What do you make of that?
It's a real thing. It's a real phenomena. It comes and goes. There was a period where it was very regular, then it kind of went away. It seems to be appearing again. And this is really perpetrated, we believe, by certain traders that have offtake agreements, that have a financial incentive to knock the price down on certain days, because that's the mechanism by which they're pricing their offtakes. And then they turn around and they sell it, when it goes back to where it was the day before, $1 or $2. It's frustrating to us. I think it's well understood that this happens on a regular basis. It is what it is, and when we have capital, we can try to take advantage of that. Right now, we don't have excess capital to deploy, but historically, we've tried to hold cash on those days and try to circumvent, that short-term noise. I think the main takeaway is, although it's frustrating, it's a short-lived event. We saw one the other day where the price went down $1 or $2, and then, within hours it goes back up. So it's a frustrating thing. It's a function of a smaller, less liquid market, and a behavior that unfortunately people have been conditioned to do over many years.
Talking about the spot price, that it might be a good point to note that apparently there isn't really a spot price in a traditional sense like you'd have for gold or silver. Yet that's what a lot of us retail investors pay attention to, maybe for a good reason, but maybe in an incorrect way, though. So how do you do it? How do you track the price of uranium? And has that also changed recently, the way you track it?
No, it hasn't changed at all. I mean, it's become much more liquid and transparent, I would say, in general, in the last few years. Now, this year to date, trading in the spot market has been a lot lighter. I think that's a function of two things. One, utilities have kind of walked away when the price kind of spiked through $100. And I'm not saying utilities buy a lot of uranium through the spot market, but historically it could be 5 to 15%. We think that's come down. Producers who historically needed to kind of build up their inventory at times, they've been kind of quiet in the spot market because, again, what incentive do they have buying uranium at $100 and delivering it at 57? Doesn't make any sense. And then obviously we were active earlier in the year buying uranium. We bought about 2.5 million pounds, but we haven't had any cash to build up our inventory over the last few months because we've been trading at a discount. So, I think just generally it's been lighter because market participants have stepped away. And it's also been, I think there's been overhang with what are we going to hear from, Kazatomprom, which again, we were supposed to typically we would find out in March, what the next year guidance was going to be, and they kicked the can down to August. So for those 6 months, everybody was kind of scratching their head around what's going on there. So it's been lighter, but we report every single transaction to the pricing reporters. We think that's important. to give people as much information as possible and signals. But we're monitoring the market every day, looking at what's available and who's trading what and what size. It's just been really, really quiet. Not just, as I said, not just in the term market, but spot market as well has been really quiet.
And I appreciate you reporting these transactions. I think that's a big part of why we see the spot price being updated as often as we do. But what do you think about that, by the way? Do you agree with how price reporting happens? They catch a lot of flack online. Is that for a good reason? Would you change something?
Well, look, it's a voluntarily reported market, so it's always going to be, prone to some limitations. But the market has become much more active the last few years, and it's still a fairly small market relative to, say, the gold market or the silver market, which is obviously trading real time in much larger quantity. So, the one thing I think people get frustrated with more so is the long-term price, because it's only published once a month, and it's really not the price that people are buying uranium at on long-term contracts, because there's so many other mechanisms in the contract terms that will dictate what the utility will ultimately pay when they get delivery in 4, 5, or 6 years. And it's not $80. Obviously, there's all kinds of caps and floors around those prices and escalators and things like that. So it is a little tricky, and those terms are not reported to the marketplace for competitive reasons.
Is that not something you can do yourself, report pricing on your website?
Well, I think people kind of theoretically back into an indication, based on where spot is trading. And obviously, we're not allowed to republish the third-party pricing sources that we use, because we have license agreements that prevent us from doing that. But I think people get a pretty good indication from various sources. Now, they're not all perfect, but you get a pretty good indication of where spot pricing is on any given day.
But that's not something you're thinking of, or something that is going to come in the future, where you do your own price reporting, if you will.
Yeah, I mean, we're using third-party price reporters to build our net asset value. And let's go back 3 years. We were the first fund to publish a daily NAV in the uranium market.
Yep.
For that, you would get one once a month. There's still another fund out there, or not a fund, but a company out there that does it once a month. So the fact that we went to daily pricing, I think, was a real game changer, and provided people a lot of transparency and confidence around what exactly they were buying.
I think that was a good move for you. Well, I think you'd also agree, you've seen inflows, I suppose, over time. The product has worked well for you, so that was a good business move, I think. I do want to talk about contracting in the long-term market, because you mentioned it, but it seems to me like utilities are once again falling behind. U.S. utilities are once again falling behind in terms of long-term contracting, essentially leaving them uncovered. Is that the case, or is this just a wrong assumption on my end?
Yeah, no, I don't think that's the right way to frame it. The reality is all utilities are covered. They could be covered for a year, they could be covered for 2 years, they could be covered for 3 years, they could be covered for 5 years. It really comes down to each utility in terms of how proactive they've been in terms of building their procurement book. And this is why the industry does not move like the natural gas market does when there's a supply disruption, or these price spikes. There's 2 reasons. One, you just don't want to ever be caught short fuel. And second of all, because you can't turn the machine off. But second of all, it takes a long time to move U3O8 through all the stages of the fuel cycle to actually fabricated fuel rods. That process can take 2 years. So if you think about it this way, you might enter into a contract today to take delivery of uranium in 4 years. That uranium may not go in your reactor for 6 years, 7 years. So you're making decisions today around fuel that will ultimately be used many years in the future. And this is just a very effective supply management that the industry has worked through over multiple decades of operating. This is why the capacity factor of a nuclear power plant, tends to be around 95%. They run all the time, because there is this meticulous planning around ensuring you've got enough elements in all stages of the fuel cycle.
But they're not, well, my gut feeling is that they're not contracting as they're supposed. I mean, why not? I'm not being a utility buyer, but they're not. Maybe they're not contracting as I would like them to be contracting. Is that the case?
I think it's fair to say that some utilities have been very proactive and seen the market signals and reacted to them as early as 2022. Other utilities, I think, have been a little more skeptical of the market signals and have not covered future requirements as much as they should have. And hindsight is obviously 2020. So I think it's mixed. But I would say that just take a step back and say, given what's going on in the world, meaning electricity prices are high, there are all kinds of government incentives for nuclear power now that didn't exist 2 and 3 years ago. The industry has really a golden opportunity to go through another renaissance. Power stations that were scheduled to be closed are not closing. Power stations that are closed are contemplating restarting. And obviously there's all kinds of uprates being contemplated, meaning power plants increasing their capacity output. All of these things are super bullish. Now, the backdrop on the supply side is we've had all kinds of supply challenges. We've had all kinds of geopolitical challenges in terms of Russia and its role in the fuel cycle. Niger, obviously, up until a year ago, was supplying the world with 4% of global uranium. That's now 0. So all we're saying is that in light of all of the potential risks and disruptions, we're a little surprised that utilities haven't been more aggressive, kind of building back up their inventories like they did in the last cycle. And they were much more aggressive in the last cycle, buying uranium at much higher levels than replacement rate. So again, step one, get back to replacement rate contracting. Step two, how much more will they bulk up from there? I think it's also a bit of sticker shock. So if you think about how much the price has moved in the last few years, there was an interesting stat I read that last year, U.S. utilities, which took delivery of about 50 million pounds of uranium, they paid, again, this is based on legacy contracts signed years prior, but they paid $43.80 on average per pound for 51 million pounds. So now you're going back to market to contract and you're saying, the price could be 3 times that now. That's a bit of a sticker shock reality hit to their budgeting process. And that's exactly what they're going through right now. European utilities last year took delivery of a little less than that and paid a little bit more than that, but it was still sub $50 a pound. So you've got a real transition here in terms of the days of buying and taking delivery of uranium with in the 40s per pound to future deliveries are going to be in the $100, $120, $130 per pound. That's a big adjustment to capital budgets. And that process obviously has been a bit of a process to work through.
I listen to these things in the way you discuss everything, and it ends up in very bullish. I mean, the demand situation is there and improving. The supply situation that we've been talking about over the last couple of years is also there and worsening, it seems. And so at the same time, and you just said hindsight is 2020 and wrote it down, I can look back at the price of some of the equities, and I still find it hard to believe that we're really only up 10% on a year-on-year basis, and that we're still below some of the highs that we traded at in 2021. So this is 3 years basically of flat gains with volatility in between. And if you bought at the right time, sold at the right time, you made money. But what do you think? What do you think is needed to get us into the next leg up? Is it better retail sentiment, or are we sort of at the point where only fund buying can save us from here?
Yeah, well, we've seen pretty good flows into the uranium mining ETFs around the world this year, which I think is a function of improving sentiment and improving valuations. And also, I think more institutional investors are starting to nibble in the equities, whereas in the prior years, they were very focused on buying the physical commodity and less so on the equities, other than 1 or 2 of the larger cap ones. So I see, starting from last July, so in the last 12 months, we've seen a rotation in terms of on a couple of fronts. One, we've seen more capital come into the uranium mining ETFs than the physical funds. So and last year it was kind of $6 uranium mining funds to like $4 uranium mining equity ETFs. This year it's like 8-2. So it's accelerating. I think it's accelerating because you've got more institutional interest starting to dive into some of the equities based on our conversations. I think it's also a function of uranium pricing has gone up so much from last summer to today that it's going to disproportionately help the equity. So people are feeling more comfortable about buying the equities. And then the third thing is, as you mentioned, the equities really underperformed the commodity from November 2021 to July of 2023. And when the equities were moving, it was like one or two names. We're getting better breadth, in terms of participation of those equities. So you got more, I'd say, risk on sentiment happening in the equities, and you're getting better participation from a wider range of companies. That I think that's positive. I think all these signs are healthy. We go back to one thing between now and 2040. If you look at a whole host of different analysts and industry groups, 1.3 billion pounds are uncovered right now, requirements. So there is 1.3 billion pounds of required buying that utilities need to procure and take delivery on between now and 2040. That's a lot of uranium that has to be sourced against primary production, which right now to us, yes, it's been growing the last few years, but the big step changes in uranium production are not going to come for 4 to 5 years until the Kazakhs sort out their acid shortage issue and we build some new mines.
Do you also have an ETF rebalancing coming for you for the URNM, I believe in September? Is that given the lack?
Yes.
Yeah, it's twice a year, right? So it's March and September, if I'm not mistaken.
Correct. Yeah.
Given the lackluster performance, are you going to be doing something differently this time? How did that really happen? Like, if let's say I'm a uranium, small cap, I've just fallen under the requirements, which is what, $25 million in market cap. I'm 21. Do you just sell all my shares in one day? You crash the price. Like, how do you deal with that?
Yeah, so the way the ETF works is it tracks an index which we license from a third party, which is North Shore Indices. So there's a index methodology rule book that we have to follow, or the index provider follows. So it's very transparent. Anybody can model out, potential changes and weights, additions, deletions based on liquidity parameters, market cap parameters, etc. And like, quite frankly, there's a whole industry of people that are dissecting and trying to arbitrage these index rebalancings. We saw that just a few weeks ago when at the end of June when the Global X Fund rebalanced, it came into the market in the last 10 minutes of the day and had to buy 3.2 million shares of SPUT. And you might say, well, why would they do that? Why would they just come in and buy 3 million shares in 10 minutes? And the reason is quite simply, and I can't rationalize it, but they'll tell you it's all about minimizing tracking error between the fund and the ETF. And the way they minimize tracking error is to do the trade all in the last 10 minutes of the month. So it's a bit frustrating because it creates all kinds of ripples and disruptions in the market, but this is their practice. And now obviously everybody knows this, and there are a whole bunch of hedge funds and whatnot that try to game it. So it does create some short-term noise and volatility in some of the names. Companies come and go in and out of the index if they fail to meet those requirements, or if a company becomes too big. For example, in our junior uranium mining index, it could be removed. Now, how we go about doing that is we try to be as thoughtful as possible, meaning if it is a smaller cap name, we know we have to add to it or we have to reduce to it. We look at the liquidity, we do an analysis, and our sub-advisor at ALPS that does the trading for us will put in kind of a buy program or a sell program, sometimes over several days before the actual rebalancing, to help mitigate any kind of market impact.
Oh, okay. So it's a period, because again, it says rebalancing in September. I was just wondering, what does that mean? Does it mean the whole month of September? Does it mean that it has to be done at the end? Does it start? Like, what does that really mean?
Well, what it means is the index officially changes on that one day, but we do have flexibility to kind of ease into it, especially on some of the less liquid names.
Good. Good. Same question as the one I asked you for SPUT, though. Is there something that some of the institutions are asking you to improve on? Is there something that you think you can improve on in the URNM and URNG?
Yeah, so I mean, on SPUT, I think the number one question we get is, how can we help manage that discount through the air pockets? And I can tell
Yeah.
you, it's a very mixed perspective. We have some institutions that are newer to the trust that have said to us, "Hey, you know what? We've analyzed it. We know it dislocates from time to time. We're perfectly fine waiting those out or buying more when there's a discount available." Other investors get a little antsy and say, I'm getting a little bit of heat from my boss. Why is the thing at a 10% discount? What can you do? And look, the only thing we can really do is potentially put a limited redemption mechanism in place. We've talked to a lot of shareholders about that idea, and we don't think they would approve it because, again, it has a high threshold for them to decide on it. We just can't arbitrarily implement it. And I would say the majority of shareholders do not want us to do it. So we floated the idea because, last summer we had an air pocket, and I said, look, this is the trade-off, and they said, look, we'll live with the discount and let's leave that off the table for now.
Well, what about the URNM and URNG? Is there something? I mean, they're relatively standard ETFs, I suppose. There's not too much special in them besides a theme. But yeah, I mean, is there anything you can improve on?
Yeah, I mean, look, people are always looking at index methodologies and how the market landscape is changing. We want the market's dynamic, so we don't want the indexes to kind of fall behind. We do in some cases contribute to the index construction in terms of URNJ, our partnership with NASDAQ. We help them build the initial universe of companies. So we do have some involvement, but at the end of the day, it's their index. We license it from them, and it's an arm's length relationship. But we're not contemplating any changes at this time, but we're always monitoring how the sector is evolving. One of the things we're really focused on with all of our index designs is focusing on pure play companies. We don't want the index to get watered down by including a lot of companies that are kind of peripheral to the thematic. We don't have companies involved in, building nuclear power stations, doing the engineering for that, trading uranium, those kinds of things, or companies where uranium production might be a very small percentage of overall revenue or their asset base. We really try to focus on the upstream pure play companies where you get the most, operating leverage and optionality to higher uranium prices.
Good. Well, John, that's about 45 minutes on uranium. I am rushing to talk to you about copper as well, though. And I would want to catch up with you on uranium again once you're back back from the WNE. So copper, what's I suppose the same question that I asked you about uranium at the beginning. Copper is becoming an increasingly interesting situation, especially given what's happening and is expected to continue happening in China over the short to intermediate term. What do you think happens to copper over the next couple of months here, and what are the most important developments you're watching?
Yeah, well, I'm going to start off by saying that when we do a lot of institutional marketing, we kind of wrap up the meeting, and I ask them, okay, we just talked for an hour about uranium. What other metal is kind of on your radar? What else are you guys interested in? What else are you positioned in? I would say it's about 80% of the time I get the response copper. And I'm not surprised by that because if you think about it, this is all very similar. You're talking about energy production, clean energy production through nuclear energy, and you're talking about moving electrons around through copper. So there is a very high degree of overlap between uranium investors and copper investors because, as I said, it's part of this electrification, growing electricity demand, etc. So copper is kind of interesting. First of all, copper is a huge market. Relative to uranium, copper is huge. It's 31 million metric tons a year when you include recycling, against uranium, which is 150, 160 million pounds per year. So the copper market is huge, and this is why institutions are naturally gravitated to it, and I think are positioned at a higher level than uranium because it is bigger, it is more liquid for them to play in. We've also been mining copper for 5,000 plus years. Just the other day I read a story about they were doing some archaeological digs in Egypt around the pyramids, and they found very high levels of copper contamination So the Egyptians were obviously smelting and using copper. So copper is a huge liquid market. We've been using it for thousands of years, but that's also the interesting investment opportunity is because we found all the easy stuff. We've been mining it for 5,000 years, and copper is going to be a very important critical mineral for everything from energy generation, energy transmission, and energy storage. It permeates the whole energy supply chain. So if you think about copper intensive energy generation technologies, obviously things like solar farms, wind farms, particularly offshore. Then you've got things like grids, cabling, charging for EVs, and then finally copper as a storage element in batteries, electric vehicles, etc. So we're using a lot more copper for energy-related industries and electrification, and we're using less copper for historical, industrial applications. So we see the percentage used for energy transition-related technologies growing from kind of mid-teens up to 20% over the next few years. That's obviously been very supportive for the copper price. And it's also starting to lead to the wider expectation that over the next few years, we're going to go into a supply deficit. There are some parallels with uranium where mines are kind of coming to end of life. Grades have been falling for many years, and we're going to need a lot more copper in the coming decades to meet this growing demand. At the same time, the price of copper, like uranium, kind of meandered around and was not really at incentive level pricing for many years to justify the multi-billion-dollar capex projects that you need to make when you're going to open a new copper mine. So we have a very constructive view on copper, like uranium. It's a very different market. We think it's naturally going to gravitate to more generalist institutional money because of its improved investability characteristics. And on June 6th, we actually launched the world's first physical copper trust that's listed on the Toronto Stock Exchange. Interestingly, just to kind of validate the point I made, 80% of the institutional money that came into the vehicle were existing investors, in most cases, the Uranium Trust. So again, this very high level of overlap between uranium, the uranium thesis, and the copper thesis. So we're pretty excited about copper as well. We also have a suite of copper mining ETFs that we've launched in the US as well as Europe, and those are still small, but are starting to gain some traction. In the short term, copper, it had a big run up in May. There was a bit of a copper shortage. There was a shortage of copper concentrate. And in the last couple of months, we've had a correction. The price came down about 18%. It's bottomed. It's starting to go up again. And then once again, it was the Chinese kind of signaling, hey, the copper price is too high here. We're not going to buy at these levels. And we had that correction, which we think was really healthy. Longer term, copper is around $4 a pound right now. The reality is, to build some of these new mines, you're talking about a copper price that probably needs to be closer to $5 or $6 a pound. So we think ultimately the copper price will get there in the next few years. And investing in the physical metal is kind of an interesting way to play it, because when you look at the top 10 copper producers in the world by tonnage, what you find is that only 4 of them are publicly traded and have more than 50% of their revenue coming from copper. So yes, there are very big copper producers like BHP or Rio Tinto, but copper is still, 25 or 10% of their respective revenue lines. So it's hard to get exposure to these companies. The world's largest copper producer is a state-owned Chilean company, for example.
Yep.
So, when we build our copper mining indexes with our partners, our strategy there has been focusing on the pure play companies, meaning they have to be at least 50% revenue and or assets coming from copper, as opposed to iron ore, coal, gold, whatever many of these diversified miners have. So we've got a very constructive view on copper, and we think that the market is again, like uranium, they're kind of waking up and realizing how important copper is for growing electrification around the world.
What I think you should aspire to do, John, is buy Codelco and list it on the Toronto Stock Exchange. That'd be a sign to behold. Kidding, of course, and I agree with you in the long-term view of copper. Short-term, always challenging to predict economic head and tail winds or so active in it. What and I like the comparison that you put between copper and uranium. There are definitely some similarities. What I like more about uranium, I suppose, is to your previous point that China is not definitely not unimportant, but it's not as important as some of the other players. Not the same can be said about copper. I mean, China, as China goes, so does copper. Does that not worry you?
Yeah, so I mean, copper, people always call it Dr. Copper because
Mm,
depending on the health of copper, gives you a sense of the health of the global economy. That's starting to shift. And the reason why it's starting to shift is that more and more copper, as I said, is being used for more energy reasons versus old, in industrial applications for construction, piping, that kind of thing. It's still a large part. And so last year, I think, is a really good case study where the price of copper held its own, meaning it was kind of flat for the year, but most other base metals and battery metals went down significantly. Now, you have a very soft Chinese real estate market that's weighing on copper right now. But copper's been quite resilient because more and more copper is getting used for all of these other technologies that are growing at 20 and 30% per annum. So we think that over time, copper is going to become less economically sensitive and more connected or correlated to electrification. When you look at energy consumption in a place like India, how low it is per capita, it's amazing. If they, continue to increase their wealth and increase their use of electricity, they're going to require a lot more copper. And then in the West, what's really happening with copper is new technologies, reshoring of key industries. When you look at what's happening in the US, building these huge semiconductor plants, building battery factories, new EVs, solar panel factories, all of these things require more electricity. And what's really interesting to us is obviously the role of AI and the energy intensity that has. When you look at the US, and obviously everybody focuses on it because it's the world's largest economy, if you look at the last 20 years, annual electricity consumption has increased by less than 1% per year. It's been like 50, 60 basis points. It's basically been flat. Energy consumption in the US has been flat, even though the economy continues to grow, the population continues to grow. And the reason is simple, just energy efficiency. Engineers are incredible in terms of saving electricity. Now, if you look at the new forecasts, they're now suggesting electricity demand in the United States will be 3 to 4% per year. And this is not just think tanks coming up with forecasts. This is coming from all kinds of sources. This is coming predominantly from utilities, publicly listed utilities. If you listen to their CEOs in interviews and on their analyst calls, are saying their customers are clamoring and signaling they're going to need more electricity. Why? Because of this reshoring of U.S. manufacturing, all the deployments of new energy generation, which are mostly focused on renewables, wind farms, and to a lesser degree, natural gas plants. All these things are requiring more transmission and copper. So this is really interesting to us. And AI is obviously a little bit of this part of the story because when you run these data warehouses and servers, they are 7 times more energy intense than you just running a Google search or putting your photos up in the cloud. And what's happening at these data centers is they're starting to use more copper than historically they were using more fiber optics. And copper is more cost effective and it's more energy effective in terms of cooling these data centers, which generate enormous amounts of heat. And you've heard NVIDIA tell people they're moving to copper away from fiber optics. And this is another use case for copper that the market is kind of very interested in right now, given how much excitement there is around AI.
mm. So eventually, you think that over the long run, we're going to wean off our dependency on China for copper pricing and demand and everything else?
Well, I think China still, has a huge influence on the market because they don't control a lot of the production of copper. You still have 36% of it coming from Chile and Peru, but it's so much of it, over 50% of it is goes there for processing. And, you know, in the last few months, if you look at what's happening in the refining and smelting sector of China related to copper, it's quite astounding. So historically, what happens is Chile will send copper concentrate to China for smelting and refining, and the smelters in China would charge Codelco $80 a metric ton for that process. In the last few months, the TCRCs, what they call them, the treatment charges and refining charges, have gone from about $80 a metric ton to almost zero, and in some cases they've gone negative, meaning the smelters are willing to pay Codelco for the concentrate. Now, why is that happening? Well, it's a function of two things. First and foremost, there's a shortage of copper concentrate, and that's because production in some of these markets are down. It's also, I think, secondarily a function of there's too much smelting capacity in China. And so when there's a shortage, they don't want to close the factories. They will willing to pay or receive nothing for that copper concentrate so they can keep the mills running. That is a very bullish sign that the copper market, the physical copper market, is tight. And that's one of the signals we've been watching over the last few months.
Where do you think then, talking about risk reward here, where do you think the floor is, if you will, for the copper price? Like, are we going to see $3 copper anytime soon again?
No, I don't think so. I think we saw copper price floor a few weeks ago when we dipped around 8,500 metric ton. That seemed to be where the Chinese physical buyers started to come back into the market. Again, we were at kind of 10 and 11,000, depending on what market you were at, just in May. If you look at some of the forecasts, you know, people are expecting the copper price to go from where we are right now, around 9,000 a metric ton, to eventually 12,000 a metric ton in the next year or so. So we're pretty bullish on the space. Our fund right now is about 100 million US dollars. It's still pretty small, but we're kind of nibbling away and you know, chipping away and adding more tons into our warehouses.
Maybe my aspiration should be to repeat what you just said, which is, oh, my portfolio is just $100 million, which is pretty small, but it's going to grow. With the recent M&A activity in the copper sector, though, I'm wondering if what we're seeing is real value creation, or whether these are just kind of defensive moves, if you will, by miners trying to look bigger for the upcoming bull market. So, do you think we're at a risk of another wave of destructive M&A, similar to what we saw in the previous cycle, or like, how do you look at M&A?
Yeah, I think the M&A cycle is profoundly different. The lessons learned in the last cycle have been ingrained and burned in the skulls of every mining CEO, and as well as their shareholders. So the deals that we've seen across the gold sector, the copper sector, have been done with very different considerations taken. The deals, the valuations are very different. Remember, in the last cycle, gold companies were rewarded by shareholders for just bulking up, you know, reserves, irrespective of quality or cost structure. That's just done. There was so much shareholder destruction that happened that we feel confident that the companies are not going to repeat that mistake. What's interesting to us, and it's one of the reasons why we're constructive on copper long term and why we've launched this whole suite of copper related funds, is that we do see these M&A transactions that have happened in the last few years as very important market signals. Now, what does it signal to us? Well, it signals to us that copper is going to become a much more important part of their portfolios. And just in the last day or so, you heard BHP say copper is a strategic asset for us. It's a key focus for them in terms of building up reserves. And part of it is because as the Chinese economy slows down, as the Chinese property sector normalizes, the need for steel and iron ore is going down. And they see the writing on the wall, and they want to shift their portfolio mix to be more weighted towards copper. Now, how they're doing that is obviously organically and inorganically. You've seen friendly deals in the copper space. You've seen hostile deals in the copper space. It really highlights to us how strategically important it is for these companies to build up their exposure to copper. It also tells us something else around the incentive pricing to build a new mine at copper at spot price around $4 versus the reality of these projects probably need $5 and $6 a pound copper. And so sometimes it's easier to buy these things to build up your reserves when copper prices are still below incentive pricing for big greenfield projects. So we think that's a very interesting sign, particularly when companies are willing to go hostile in complex transactions to, extract the prize they want, which were the copper assets at Anglo.
Are you finding in your conversations with these larger financial players that they care about ESG when it comes down to copper? Like, is there the sentiment of thinking, oh, green copper is better than whatever other color copper?
I definitely run into that when I'm talking to European institutions, continental European institutions, less of a consideration, I would say, when I'm talking to institutions in the UK or North America. So I'm not saying it's not a focal point, but I would say it's much stronger in continental Europe, particularly in places like Germany and Italy. But yeah, the industry does have a designation called Copper Mark, and that's basically an accreditation at mine level that mining is done responsibly. And so companies are increasingly trying to get their mines accredited so they can go to their end consumers and say, hey, you don't have to worry that there's going to be some story in the newspaper about copper being dug out of the ground by kids with no shoes on. This is all being done very responsibly in terms of social license in a community, etc. So that it is very focused. It's important to institutional investors. It's also important for end buyers. The OEMs and the end users of these metals, they don't want to wake up one day and find out they've got metal that was sourced in really horrendous working conditions or from countries that are prone to lots of corruption.
You really do paint a verbal picture when you told me about the kids with no shoes on.
Well, it's unfortunately a reality in some of these countries. It's incredibly sad to see. And journalists love doing these investigative research reports and stories on it, and we get asked about it. It's obviously more prevalent with certain commodities like cobalt, but unfortunately, there's a lot of sad, poor, sad, down out places in the world where that's the only way they can make a living.
Good. Well, John, I've already not been too respectful of your time. You promised me an hour. I've taken about an hour and 5 minutes or something along those lines. What else are you working on in the meantime? Any new funds? Anything that we should be paying attention to?
No, I don't think so. Not anything new. We've been very active for 2 years, buying and building funds. We're very happy with our suite of funds. I would encourage your viewers, if you want to learn more about Sprott and our funds, please come to sprott.com. We have a lot of really great education. We do uranium and critical materials research reports every month, as well as precious metals. Like yourself, we've got really great podcasts with third-party guests. So lots of really good information to help you with your learning and education. And as I said, we've got funds listed on both sides of the pond. So we have a partnership with Han ETF in London, where we've got some of our funds duplicated there. And we're really trying to cover the globe in terms of providing our offerings to them.
Okay, so you're going to become my competition here, John, with all that podcasting. I don't know how I feel about that, but no, jokes aside, though, thank you so much for investing your time in me. I always appreciate you. I always appreciate your views. I'll speak to you in a few months again, hopefully to get an update on both copper and uranium again at that time. But the hour you promised me, it's actually over. We're actually over time, so I'll let you drop off now. Thank you again so much for doing this. I'll be moving forward to my favorite part of this energy transition talks episode, or any episode really that I do, and that's of course the disclaimer, right after which I will actually do jump into the CEO barbecue. But there's a warning on your screen right now. You're obligated to read it, I suppose, but you're also, this is the only piece of advice you're going to receive in this entire video, and that is to actually read that disclaimer, because it's not just some disclaimer, it's an actual warning that will help you not lose money, or will protect you from potentially losing money, I suppose, which is, by the way, the norm and should be the expectation in the sector, because it is a risky sector. Part of it is that I am here to make money. I make money from the existence of this channel, and specifically from companies paying for the production of their interviews. In this episode specifically, CopperCorp That's the first company that we're going to feature on here. They have paid for the production and for the production of this interview. So keep that in mind. And just keep that in mind when you watch whatever type of company specific content out there. Oftentimes that is meant as marketing. And although there's not going to be any buy or sell recommendations in here, I don't do that because there's a clear conflict of interest. Others out there might be. So be aware of that. That bias is not always going to be clearly disclosed with everyone out there. So keep that in mind. Unfortunately, I'm not a magician. The guests on here, John Ciampaglia, is also not a magician. And the CEOs that come on here are normal people. So we don't possess any superior knowledge about what's going to go up, what's going to go down, what's going to go in circles, what's going to go back and forth. We don't know that. Okay, so no guarantees are going to be made in here besides only one, and that will be that they're forward-looking statements in these conversations. Those are conversations that are general and impersonal in nature, containing hopes for future events that may or may not take place, depending on many different factors. And you have to be aware of that. Be aware of the inherent risk to investing as well. Investing contains risk, and there is also an increased risk of investing in non-revenue generating venture capital opportunities, especially when it's in the harsh reality of the mining industry. Be aware of that. Please talk to someone who knows what they're doing. Please talk to someone who's proven to know what they're doing, like a professional investment advisor who's licensed to give you advice, because none of the people you're going to hear and see in this episode today are that. So you should do more research. You should talk to a professional investment advisor. So before taking your own decisions, go to setterplus.ca, where you're going to find the company's official filings. And if you don't do that, you are highly likely to lose your money. But even if you do that, there's still risk. You can still lose your money. There's disclaimers on your screen right now. If you don't enjoy losing money, rate them and be careful out there. With all that said, though, I will kick off the CEO barbecue portion of this episode by traveling to a place that I haven't visited in a while, maybe like 6 months or so. Well, that being Tasmania, which is actually an island state of Australia. So it is to the south of the Australian mainland. Luckily, I'm not going there alone, though, as I'll be joined by Steve Swatton, the CEO of CopperCorp Resources. Company's listed as CPER, so that'd be CPER on the TSXV in Canada, where after a recent surge in volatility that we're going to be talking about later on, an average of 265,000 shares has been trading daily. With a now almost $8 million market cap and 86 million shares outstanding. Today, this is a 9-cent stock, with a 52-week high of almost 15 cents and a 52-week low of just under 5 cents. There are almost 20 million warrants and just over 6 million options outstanding, bringing the number of fully diluted shares to about 112 million. Management and insiders are significant holders of those shares, about 17% of the companies in their hands, and Crescat Capital owns another 5.1%. The last financial statement, which is dated June 30, shows me about $4.5 million in current assets, about 4 million of which at the time was in cash and cash equivalents, with some account payables and some prepaid expenses on top of that. No long-term debt was recorded, and the current liabilities were noted at about $300,000, with the majority, so a little over $250,000, being recorded as account payables and accrued liabilities, again, easily covered by cash. In terms of corporate expenses, the same financial statement shows me that CopperCorp spent on average over the last 3 reported months about $70,000 again per month on average on what I would call administrative expenses, where about 2/3 of that, so about 65% to be specific, went towards management and consulting fees, director fees, and other professional fees. Marketing and travel and conferences combined represented about 1/3 of that overall expense, and a few, so various other little expenses in there as well. That's again only the administration spent, whereas an average of just over $170,000 was recorded as exploration expenditures over the last reported 6 months. So that's about $1 million in total, where 30% of that was spent on drilling, a little over 30% on field operations, 20% on contractors and consultants, just under 20% on geochem, and a small part on geophysics, as well as travel and accommodations. So in summary, about $70,000 a month on average went into administration, and about $170,000 went into exploration, which my calculator says is an average monthly burn over the last reported 6 months of roughly $240,000. and there's a 70-30 split in favor of exploration. So there's about 70% of the money is going into the ground here. And of course, as always, please understand that this financial statement is nothing more than a snapshot in time, in this case, again, specifically at the end of June of this year, but it really simply shows you what the finances look like on one exact specific date and nothing more. Finances, though, are a fluid thing. So it is your responsibility to go to the company's website as well as setterplus.ca, look at all the numbers yourself, make sure you're getting the full picture and the most up-to-date numbers. For CopperCorp, that full picture will be crystal clear to avid viewers or followers of the channel. As Steve and I have done probably half a dozen or even more interviews over the last year or so. But in a nutshell, they have close to 2,000 square kilometers of 100% controlled land, again, in Tasmania, which they believe to be prospective for copper, gold, and even rare earth elements, with some recent developments suggesting even more prospectivity that we're going to be talking about. So again, if you've missed the previous in-depth overviews of the company, go and watch that. But Steve, I'm rushing to shut up and let you do the talking here with maybe just let's start with a general update on what's going on at CopperCorp these days. And yeah, talk to me. What have you done for shareholders lately?
Yeah, it's been a while since you and I spoke, Antonio. And since then, I guess it's been the Tasmanian winter. So it's been down tools trying to look at the information that we have at hand. And also, since we spoke last time, we drilled what's called the Darwin prospect, which at the time when I think we had our last discussion, we were talking about rare earths, and rare earths were quite a topical subject. So we do have one location, South Darwin, which is at the southern end of the Razorback property. And historically on there, we had 30 meters at 2% total rare earths. So we went and drilled around there. And to be frank, I mean, the results replicated what we had in terms of the rare earths, maybe a little lower than we were anticipating. They had some copper, but it didn't really excite the market. We put that news out recently, but consequently, at the same time, coincidentally, I should say, at the same time, we were working on the surface, doing a whole bunch of magnetic and gravity work, and realized that we had a bunch of these kind of intrusive bodies that are sitting within this Razorback property, extending for about 20 kilometers just south of Mount Lyell. We went as a company, we got together with Ciampaglia that own Mount Lyell, and we did quite an in-depth tour of their facilities, seeing what they're doing. They're trying to bring the mine back into production. And by the way, the state government are giving them quite a lot of money in order to get this mine up and going again. But obviously, they're looking for future production. So they're looking keenly over the fence at us, and we're looking keenly over the fence at them. And what work we did, what we saw they have, which is roughly 22 intrusive bodies, of which about 8 of them are actually ore bodies that have been mined in the past. It's not just one ore body, it's a whole bunch of them. And we have very similar stuff. And that's why I think the market recently got quite excited about what we're doing, because when you look at, and we put it in the last news release just a few days ago, like side by side, they look pretty similar. You know, the signatures that they're getting at Mount Lyell and the signatures we got. And in talking to the geologist there, he's a very nice guy. He's been there kind of most of his life. He was saying that they're quite keen to do deeper drilling because they have a suspicion that there's better grades at depth in this one called Tarsis and another one called Prince Lyell. And we seem to have the deeper component of some of this mineralization. We don't see epithermal gold that they do. They've got a couple of spots. So we think we're slightly deeper in the horizon. Anyway, the geophysics looking similar, and we're excited about it. And that's why I think it was picked up recently. And we traded 5 million shares in the last 2 days. It's been, you know, I think you did a great introduction there, 235 million in 2 days. I mean, I can explain what I think happened, but who knows? This market, it has its vagrancies, right? And you really don't know why things run.
I do want to talk about that comparison that you're making there, and hopefully we talk about King Lyell, not only Prince Lyell eventually, but that volume. I mean, it's notable. You went from the day before the volume spiked, you traded 50,000 shares. Next day, 2.5 million. Day after, 2.5 million, as you said. Today almost a million. Over 500,000. No, it's not a million. I looked wrongly, but I mean, it's still midday, so it's still gonna. I mean, hopefully more volume. But who's buying, and the stock price is up, so there's more buying, I suppose. So who are you getting into the story here?
To be frank, I think it's coming from a bit of chit chatter on a blog, co.ca. I'm sure you're aware of it. I know you're aware of it. And there's one particular person who was talking in a very positive way about the anomalies that he could see. He knew Mount Lyell. Obviously, he's a geologist, a senior geologist from a large company. Drew the analogy, and he has a little bit of a following on there, and it kind of snowballed. And one thing led to another, and it was just everybody kind of piling in. And then I think when they realized that our cash balance was quite high as well, and then it kind of took off, said, look, this is undervalued, here we are. And then look, it's no secret that the Tasmanian government are very much behind the resource sector there. And like some of the bad news that we hear from other parts of the world, it's kind of floating a little higher than other places in terms of prospectivity and government support. There's not too much negative to talk about in terms of Tasmania. All you want to find is good geology. And I think the results, this person obviously understood the significance of the intrusive bodies that we have and the potential, particularly when you're talking about Dukes, where you got 31 meters at 1.5% copper just sitting above a big anomaly. Suddenly it takes off. I mean, I can say it, but if a third party that I don't even know ends up saying it, who's got some following, things take off. And that's the only thing I can think of, Antonio. Look, we've been excited about this for a while, but of course, I mean, it's my job to be excited. It's my job to be optimistic, right? About these things.
Well, I don't think that since listing, what did you list this in early 2022, I believe?
Yeah, January. Yeah.
You've never traded that many shares on a single
No, I was looking. I mean, the chart that I've got on Stockwatch had to like expand itself, to
Yes.
take account of the trading volume. Yeah, it is incredible. But it just goes to show that there is a little bit of a pulse in this junior market after all, if you have something that people are interested in. And
people want something to get excited about. And these stories are what people do get excited about. Obviously not without risk, and we're going to talk about that. Maybe we can talk about it right now. I mean, you make the comparison to Mount Lyell here, but this is still early days though, right? I mean, it's really only a 3D inversion modeling of magnetics and gravity data. And these pipes, essentially, they're notably large. But how do you differentiate between them just being a geophysical anomaly versus it being sort of the pathfinder to that IOCG that you want to go for?
Yeah, there is not. Look, the truth machine will work. I think you mentioned it earlier. At the end of the day, when we get that out and start drilling, we'll really know for sure. But there is like when you look at IOCGs, when there is a coincident mag and gravity anomaly, and you've got a certain amount of geochemistry at surface, it seems to be somewhat prospective. You've got a better than average chance of having some success. Like at the end of the day, I went through the geophysical presentation with the consultants. Oh my goodness, they'd done a lot of work on this. So look, it's still a theory. Absolutely right, Antonio. This is exploration, but this is what people to go into the adit. That was a 1902 adit that had been opened up again. Now in 1902. There were something like half a dozen smelters in that general area, and the smelter was about to go into production using some of the ore from the Dukes area. But this First World War came along a few years later. They lost a lot of the younger population, and Mount Lyell really took off. So Mount Lyell became the main. At that time, nobody was quite sure which one was going to be, if you like, the dominant ore bodies in the area, but certainly Mount Lyell was looking good at the time. It's found in 1892, became popular in 1996, and then developed into the major. But there was so many of these operations around there. But the point I'm trying to make is it was prospected to like crazy all over those hills, obviously after the discovery of Mount Lyell. And this is one of the ones that would never really followed up. As a result of Mount Lyell being so successful, the gravitas went to Mount Lyell. So yeah, but geologically speaking, the rocks look very similar. And the geophysical, we got mag and gravity. They've got mag and gravity at Mount Lyell, and obviously Olympic Dam and these other ones, Carpentaria, Prominent Hill, they all look very similar too. So all we're saying is we have the hallmarks of it. We even got rare earths, which those have too. in the deeper areas of Mount Lyell, they have rare earths, and definitely at Olympic Dam. Now, I'm not drawing an analogy with an Olympic Dam. That's just the end member of one of the IOCG suites. But we can certainly draw some analogies with Mount Lyell.
Yeah, I call it Daddy Dam because it's the granddaddy of IOCGs. But it does have uranium in it. That's actually what attracted my attention to it in the first place. Are you finding anomalous or uranium, or do you think you can
Very
find
low.
that?
Fortunately, very low.
Well, why fortunately?
Well, if you're transporting the ore and you've got a lot of uranium in it, you have a lot of additional complications, if you like, and processing it. Like if uranium is not something that you're looking for, and you've got a bunch of other stuff, you have to work out how you're going to extract the uranium, right? And we went for, no secret, I don't think, but we went for discussion with Rio Tinto quite a long time ago, and that was the first question they asked us. And I was blown away because I wanted to know, well, why are you so interested? Because when they transport their ore, or they knew about BHP, obviously, it's something you have to take into consideration. It's the uranium content. Obviously, it's going to be a lot more expensive to take it out and then transport the ore. So that's the first question they asked, because it wasn't in any of the data that we gave them.
Maybe I should go and work for Rio Tinto, or not. This goes 1.4 kilometers deep, though, this anomaly, right?
Yeah, but it does surface around 300 meters. So, we'll be drilling down to about 300, 350 meters, and we'll get a good idea at that level. But yes, I mean, look, that's not our target. We're not going down that deep with these holes. I'm not spending the amount of money to go for deep drilling here. We're going to do some shallow drilling. Hides is another one. I don't know if you picked up on that in the latest news release, but that one is looking a very compelling target. And, when you had BHP, who, if I'm not mistaken, I put some number in there that they're 0.8% copper coming out of it over I think 20 odd meters, never analyzed for gold, right next to this constant gravity magnetic anomaly. And it's a bullseye target. It's classic exploration. Until you drill it, you really don't know. That area actually, Antonio, is quite easy to access as well. Like Duke's is super easy because it's right next to Rome. By the way, I think we just put a post out today that we're showing that we're building the road so that we get access for the drills now. Hides also has a road into it. This area is so well connected. This is also part of the appeal of it. You're not going out onto the boonies here. There are no First Nation issues that I'm aware of on there. I mean, the First Nations were in Tasmania, but at the moment there aren't any claims from First Nations. So the only local group that have any sort of claim over the area is the hydro people. It's a bit like in BC, right? So they have a dam fairly nearby, but we're far enough away that it's not going to impede them. In fact, the Tasmanian government is so pro development, resource development, and hydro, and having completely clean power, that the two are looked upon as kind of brothers, if you like. One services the other, and obviously the mining is the biggest source of revenue in Tasmanian state. So they're very keen now because of Avebury. I don't know if you know about Avebury nickel. It was going to come into production, but it never did. There was a lot of kind of like housing built in Zeeland, and there was a lot of hype about it locally, but it never came ahead. It never went ahead. So this new government that came in this new premier who took over in 2022, he's made it his mandate to progress the mining industry. One of his mandates, anyway, is 100% renewable energy, continuing that one. They already have it in Tasmania, and to develop the mining industry. And Mount Lyell has been particularly singled out. They've given them $9 million in remediation costs to service the mine. They do need to do a dewatering, and they're going to give them $25 million when it comes into production. I mean, here we have a mine that's been going off over 100 years. It was closed in 2014 because of a couple of unfortunate accidents that occurred, and it hasn't been open since. But the government are very keen for exploration companies. Like we get what's called an EDGI grant for if we're successful. with drilling. So we get a whole bunch of our drilling costs back. So going back to your question, are you going to be drilling the deep ones? No, we're not going to be drilling the deep ones, but we may well get $70,000 per drill hole back as a result. The government are so keen for companies like ours. And I'd say that in Tasmania, Antonio, there's not that many junior resource exploration companies who have been as aggressive as us. In fact, I think we've been the most aggressive over the last 2 years. Us and maybe Stellar Resources, who are drilling for tin. And between the two of us, I mean, there's a lot of expectations that there's going to be more, mining. And there's 4 operating mines in Tasmania: Savage River, Henty, Rosebery, and Renison. They're all significant mines. When I was a geologist, we all studied these different mines, right? These are not insignificant things that are contributing to the bottom line of Tasmania. They are very significant. And unfortunately, this Avery book got taken away. So the government said, right, guys, go for it. We're going to give you grants. And, to get a drill permit, for example, it's not a matter of months. It's a matter of weeks most of the time. This is unheard of in first world countries. I mean, yes, you apply, you have to go through all the application process, but you do have access to the people who make the decisions. If you need to pick up the phone, they're available. It's a great place to be working. And, going back to your question, sorry, I kind of segued a bit there. Yeah, we do have 3 or 4 different targets that have this geophysical anomaly. Are they deep? The actual anomaly goes down to the moho almost, but, it goes down really deep. But they do kind of surface quite close. They do come up quite close to the surface. So, yeah, I mean, there's going to be some shallow holes that we're going to put in, Dukes, Hides, hopefully. And we're thinking of drilling Hides after Dukes. And we have the budget to do it. We don't need to raise money.
I do want to talk about a lot of the things that you mentioned here, but you're mentioning the similarity in the geology there as well. And that's something that I noticed as well in that overview, talking about the alteration fingerprint of the system. You're mentioning chlorite, magnetite, apatite, biotite alteration zones in here. And that's starting to sound like a complex system to me to begin with, but I'm not a geologist, so pretty much everything is complex to me. Is this also what Mount Lyell saw early days?
Look, they're still reinterpreting what they have. It's one of the big academic sort of like discussions that are ongoing about what is Mount Lyell. Is it a porphyry? Is it an IOCG? Is it a porphyry that's attached to an IOCG? So we've always maintained that we have Candelaria style IOCG, which is one end member of the IOCG. The IOCG suite is the least understood and the most complex copper system that imaginable. And at one end, you have the massive daddy, as you said, the Olympic Dam. And at the other end, it can be like, for example, we're also drilling our other Alpine property. It has no G. It's an IOA. It's an iron oxide apatite deposit, right? It's not. So you have all of these different types of iron oxide copper gold deposits. And the feeling is that Mount Lyell is a high level one. And what we have is a lower level, deeper than they have. Yeah, I mean, I'm not quite sure how I can elaborate on that. Yes, there are all these alteration zones. Do they see them in Mount Lyell? Yes, they do. But they kind of wander around the district depending on what the level of erosion at surface has been, right? So the deeper they are in the Mount Lyell, you were talking about Tharsis or was it Prince Lyell ones, that deeper, obviously they have a different type of alteration. But the IOCG alteration is so complicated compared to porphyries and epithermal deposits that you kind of always working retrospectively once you've already like got into it. Oh, there's a chlorite, here's the apatite, here's the, and all of it's not, all I'm saying is it's not simple, but there is a rough pattern bringing you into the mineralization. And we have a similar alteration pattern to they have at Mount Lyell in the deeper levels, it seems.
Well, wouldn't you also have to come up with hematite alteration there to be responsible for that I part of the IOCG?
Oh yeah, sure, and it is there. Yeah.
Okay. And is it, I mean, or how much of it is it, is there, is it strongly, are you noticing it everywhere where you kind of poke it, or is it zoned in?
Um, no, it's not everywhere. It's kind of moving around, and to be frank, I mean, the geologists at surface are trying to pull the map together. And it'd be remiss of me to tell you that we have all the answers, but we have seen magnetite, hematite, we've seen all of the different type of iron. So there's plenty of iron kicking around, but do we have it kind of mapped out like you concentric rings of a porphyry copper? We don't. We're
But
still
you're
working
gonna
on it.
later this year?
Yeah.
Okay.
You know, obviously, the more drilling information that we have, and the geologists are in the field, right? And it's the spring now. It's still a little bit, you know, the weather still needs to get a little bit better before they can spend long days. It's more the daylight hours than it is anything else. But yeah, we're trying to do the mapping at the surface. There is good outcrop. I'd say it's about 70-80% that you can get around in. But yeah, it's a little steep in parts, but yeah, we're doing our best. I mean, we're also cognizant, and you might be answering this question later about, you know, the burn rate and all that. We decided we lay off a couple of people during the winter season. You know, so we kind of closed ranks a little bit because we didn't want to spend the capital. We realized as a company that our capital was worth more than probably the asset that we had at the time, until we were going to work on it. And this is why you and I haven't been talking for a while. I shut down everything, no marketing whatsoever, none. I didn't even go to a conference for the last 6 months. The last one you and I met at was in Germany.
Yeah.
And that was probably the last one I went to.
Oh wow, that is
So
a while back. Yeah.
yeah, so we had an internal decision to just batten the hatches down. We've got one geologist out in the field right now. He's the guy who's supervising that road construction at Duke's, and we have the VPX who is basically pulling it all together, and that's it. That's all we have. And when we have a field technician who helps out,
Yeah.
you know, when we have a storage facility down there, but we use the University of Tasmania quite a lot, and we use consultants from time to time. You know,
I do have it on my notes to talk about how you're gonna tell the story now that you know more about it later on. But first, do you think Mount Lyle might help you in telling that story? As in, do you think it's gonna get restarted? I know it's been rumored that it might. What do you think the probability is that it actually will?
Yeah, I think it will. I mean, when you go there, there's not the level activity that I expect to see. You know, I'd expect more activity than I saw when I was there. Everybody there was a very specialized technician, whether it was, you know, trying to refurbish the plant or something else. But there wasn't, if you like, a real hive activity. But the way that we were treated when we sat down, you could tell that they were very interested in what we were talking about. And you could see that they had these very clear goals as to what they wanted to achieve in a certain length. So there was obviously some sort of a desire to make sure that this thing goes through. But do I think it's going to happen the next year or two? Probably not. It's probably a little further out than that. But yeah, I mean, I think that the Mount Lyell thing will come in. The government are pretty keen to support the development of Mount Lyell, and I think there's a very strong chance it will come back. I mean, obviously, it's got some legacy environmental things that Ciampaglia have to talk to the government about. I mean, in the old days, I don't know if you know this, Antonio, but they just put the tailings straight into the river. They went right out to the ocean. Macquarie Harbour, which is a famous area for a different reason, is now like fairly polluted all along. But what the government did is a very smart thing. They've exonerated any mining company that goes in there.
Well, I do maybe want to touch upon that, although you did tell me about the permits just before. I also want to understand exactly what you're drilling. So I'm pulling up a map that is within that last news release of yours. How do you follow this up exactly? Like, talk to me about timing, size of the program. You already told me that you only want to go about 300 meters deep, but how many holes? Where exactly do you want to drill?
You're talking about the upcoming drilling?
Yes.
I think that's going to be in the next news release. Sorry, mate.
Okay, fair enough.
I can't really I've been told I can't really say it in an interview like this. I have to have it news released and then out. All I'm telling you is that we've announced that we are planning to do a drill program. But
Well,
yeah,
we should do a follow-up interview
yeah,
on that news release and
I'd
then
love
talk
to.
about that. So,
Okay.
maybe we can talk about what something else that I wrote down. Again, not a geologist, but I noticed that one of your previous holes had encountered a fault displaced section that disrupted copper mineralization, and the structural control here generally seems to have gotten a little bit more complicated over time. Is that true? I mean, is it getting more complicated, and how are you dealing with that?
There is a northwest trending structure that isn't. It's like this. It's almost like something that is regional, and they've noticed in Mount Lyell. So where you have an intersection of north and northwest, for example, so the strike is north, so the plunger and the rake, if you like, is generally north. But where there's an intersection with these regional northwest trending faults, that's where you seem to have the mineralization. So it's the combination of this fault, gravity, and mag is what we're looking for. Okay, and that's what we have at Hydes. That's what we have at Dukes.
Did BHP already know that before? I know they did an assay for gold, but I'm also thinking, why didn't they drill what you want to drill here?
Look, I don't. To be honest with you, in the 1980s, I have no idea what they were thinking. Right? They didn't even have. They didn't even have Olympic Dam in those days. So IOCGs were a kind of a thing, but nobody knew what that thing was, right? So if they drilled that, I have no idea why they did what they did. And IOCGs weren't even a thing when I was at university. I know I'm old, but I'm not that old. Okay, so it's kind of one of those things where I bet you at the time they had something else that they were chasing. And look, I used to work for BHP. They make odd decisions sometimes. I know that we all do, because you're driven by something that doesn't seem logical at a later date, but suddenly, it's a squirrel effect. They run off over in this direction. Like I spent most of my life when I was with them traveling to DRC looking for copper deposits. I never thought of looking in Australia. I never went.
Yeah.
Yeah.
Yeah. True. What were you doing in the 80s? That's maybe an interesting podcast.
80s. I was Rio Tinto's geologist for northern Sweden, Finland, and Greenland.
Oh, wow. Interesting times.
Yeah. I was doing a lot of work in northern Greenland. I loved it. Amazing.
Yeah.
It's real frontier stuff. People have never gone up there, right? Yeah.
I wish the politics over there would agree with you. Apparently they don't, because there's a lot of opposition, especially to uranium. There's a huge deposit in Sweden, as you would know. So anyways, but I suppose the work that you're going to be doing, you're staying focused on that zone. You're not going to South Darwin this year, I then assume, or like what's the overall corporate strategy for South Darwin?
Yeah, at the moment, I would say it's unlikely that we go back into South Darwin right now, because we kind of went in there ostensibly to look for the rare earths. But look, we're called CopperCorp for a reason. Copper is our main focus, and we do have two other great copper targets that we'd like to look at. There are a couple of other zones as well, by the way. Huxley's one of them, and we've got a couple of that up near the north there that we haven't even looked at yet, and they're closer to Mount Lyell. And we got another news release that will be coming out, which also is going to be talking about another zone that we've taken locally as well. So look, we've got quite a bit going on in the Mount Lyell area. It's I don't know, rare earths. Look, we had a long discussion about it last time. I've heard you've had a few interviews with different people. I mean, there was a hell of a lot of excitement about rare earths, and then you realize, it's all about the processing, and it's all about. I think you had an in-depth chat with one guy, and it's just mind-blowing how difficult it is sometimes to get these rare earths out. So we'll stick to our knitting and go for copper gold at this stage.
Well, that's interesting because we also see gallium and germanium have just been in a quiet bull market. Really, they're, I think, doubled in the last couple of months. Why don't you promote just that part of the project and maybe option it out? Split it out of a company and use it as a financing vehicle, essentially.
We're looking at all different options, Antonio. Again, it's another thing that I don't think I really want to discuss too much. Look, at the moment, the Alpine project that we have, the drilling, if you're going to go down that line, some of it is quite deep. All right, it's over 300 meters, down to 400 meters. We're putting the data package together. We've not been shy about announcing that we're looking for joint venture partners to do the deeper drilling for us, and we'll do the shallow stuff. You know, Razorback is our prime focus right now, but we'd be more than happy to entertain ideas from, you know, major company. I think it's probably more appeal to somebody of Ciampaglia's size. I'm not quite sure if it kind of fits into a BHP size right now. I mean, when you think Escondida, what is it, 32 million tons of contained copper, and I'm still quite close with a few of my old colleagues at BHP. I mean, their hurdles are so high that I'm not even sure of Tasmania, but you never know. Right? The size of our package is very appealing to them. 2,000 square meters. I've got a close friend who was on the Noront deal, which was the big nickel thing that BHP and Wyloo had a bit of a, you know, tussed up, and Wyloo won in the end. And I asked the guy who was the ex-CEO, why were these two companies battling out? They wanted the land package. They wanted the size of the land package they have. The asset itself was kind of immaterial. They wanted this huge play. Well, we've got the huge play going on down there. I don't know if Razorback is going to be the center or it could be Alpine. So I'd rather have majors drilling the deep holes for us whilst we continue doing the exploration on the areas that are a little bit more accessible. Some of the areas that are up towards the northwest. So we have two main belts, the Alpine, which is called the AMC, and the Arthur Metamorphic Complex, which is Upper Proterozoic age, and the slightly younger Mount Reed Volcanics. And that's where most of the deposits are, in the Mount Reed Volcanics. The Savage River, which is within the AMC, which is the Alpine area, is very similar to Kiruna in northern Sweden. This is the connection that I have when you ask me what they do in the 80s. The rocks in Sweden, Paktavara, Kirunavara, look very similar to the Savage River ones, but that area there is a little harder to access. When you're in the Mount Reed Volcanics, which is the Rosebery Mine, the Renison, the other ones that I was talking about, it's a little easier to get around. And that's what we realize, that taking on that huge land package is a big, you know, is a big chunk to swallow. And so we're working on the areas that are more accessible and also give us more bang for your buck with copper gold. You got to have both. I mean, at Alpine, we have good copper grades up to 2% deep, but we don't have the gold. Well, we haven't discovered it. And we understand that there is in Savage River some copper, but you know, we're still getting to learn about that area, and some of the areas are a little bit more inaccessible. But 2,000 square kilometers, as you mentioned at the start, so it's a big package of land. It's like the size of a small country in Europe, isn't it? Like Liechtenstein or something. I'm guessing.
Actually, it might be. Well, it's a little bit smaller than the country of Luxembourg, so it's definitely bigger than Liechtenstein for sure.
But yeah, I mean, Andorra or something. But you know, like it is a large area to prosecute, but certain areas are very easy to access, and others, by their very nature, are a little more remote, right? But they also have targets all over them. We have somewhere in the region of about 30 to 40 different targets within the AMC property itself. Within Skyline, which is right next to this road, secondary road, we have at least half a dozen that are right there that we can get to. We can just walk up to it. You just take a 4-wheel drive, there you are.
Yeah. I think Andorra is about 500 square kilometers, so this is like 4.5 times the size of it. This is more like Luxembourg-ish, something like that.
Yeah, anyways, I did my undergraduate thesis there.
In Luxembourg?
Andorra.
No, in Andorra. Okay, good. What you have? That's not everything though. I mean, you have Whiskey Creek. What's
Whiskey Creek's a sleeper. I'm keeping that in the back pocket for now. It's got a nice grade intersection. It might well be a sandstone hosted copper deposit. We're not really sure, but we've only got so much money. You talked about our burn rate and everything else and how much we're putting into exploration. You can't be all over it when you got 1.5 geologists, right? One full-time field geologist and a VPX that's kind of like running around trying to pull it all together. So you've only got so much manpower. I mean, it's a balancing act when you're a junior. You need to spend money, you need to be doing something, but everybody says, oh, don't spend too much. So it's a balancing act, right?
Yeah. Well, of course, you also wouldn't be an $8 million market cap company with over $4 million in cash if it were all perfect, right? So I mean, this is the opportunity, I suppose, here that you're presenting to me. What yeah, talk to me about where that money is going to go. Like, how do you envision it? How much of it do you want to spend this year? Because you said you don't have to raise capital anytime soon. But if
Yeah.
drilling starts coming back positive as you expect it to, I suppose you're going to want to ramp up drilling and then raise capital on the back of that.
Isn't that the mandate of a junior company?
That's it.
Yeah. I mean, you said it, and I'm agreeing. You know, like at the end of the day, if we have success, obviously changes the program. This is what we're here for. This is what people invest in a company like ours to do. So, look, I am optimistic that we're going to have some success here. Like I'm by nature quite a conservative person, but yeah, I mean the signs are there. What can I say? I mean, I've worked for some of the largest mining companies in the world, and they've drilled much worse targets than we have. With you know, and it's cost them an arm and a leg to do what they've done. To be honest with you, it's a great location with good targets, and we're doing it in a very economically pleasing way to shareholders. You know, like we're not overspending. Our overheads are. If you go down to Xi'an and see what we have a big shed, and even the geologist, bless his soul, he comes sometimes like camps inside the shed. You know, like these, we're not high-end group, but we switch it on in the summer. We employ a few more people. We get a lot more work done, so we get enough done, and then the winter kicks in again. It's kind of a bit of a seasonal thing in Tasmania.
Yeah, yeah. So in terms of marketing, then you said you want to ramp up again. How much of it are you doing? What's the plan for telling the story here this year?
Yeah, I have a small marketing program going forward, and look, engaging with you is all part of the like getting back into it. I'll be going to Europe again. I suspect that we'll be looking for more of a European shareholder base going forward than opposed to North America. We have a very strong North American, and we maintain that. But I think the future for something like ours would resonate with the European market. You and I were there last year, and I certainly got a lot more informed people talking to me than I'm used to, and I know it was very welcome. So I'm going to go back and capitalize on that, because the European shareholders, as far as I can see, and as far as you know, when I was an analyst, stock market analyst in Yorkton Securities many years ago, it's the same again. Europeans take a longer to warm up and get interested. I think the North Americans are more interested in a stock play flip sometimes, but the Europeans kind of hang on to it for a bit longer. And I think the story, I got a good reception when I was there, and I'm gonna develop the relationships I've already built up.
What about the relationships that you had before with the majors? I know that was kind of your thesis, is looking to get someone to spend dollars on your project. How's that progressing?
Yeah, it's good actually. Look, but the point is, Antonio, when you do this, you don't really get a second chance at you know, going out. So we're putting all the data together, putting the package together. I have the relationships, yes, and that's part of my job as a CEO. You know, my job is to raise money, make sure we don't run out of money, and introduce the company to suitable partners. Yes, I know them, but I'm not going to go in with a half-baked story. At the moment, we're doing some drilling. We have all the data for AMC. We're pulling it together. Yeah, we'll be presenting it to the right partners. Someone like Ciampaglia is a really good option as well, simply because they're hungry. They're platinum palladium company ostensibly, right? So they're looking now to switch focus a little bit more into copper, and we're already there. So obviously, it's a company like them or of that sort of size, I think would CopperCorp would appeal to.
What do you think the advantages and disadvantages are of that, though? You're probably, you know, weighing it off in your head. What would you say the cost benefit analysis here is?
In terms of going in and doing a joint venture?
Yeah.
Well, they'd be spending the money, and we'd be you know, riding the coattails. I'm not quite sure if we want to be joint venturing everything that we have, but certainly a large part of it. And the cost benefit to us is that we don't have to dilute the company to raise more capital. And you know, at the moment, I think we have enough of interest. So it's just my job is to make sure we negotiate a deal that kind of makes a bit more sense. So kind of like that one that that Inflection did, that kind of deal, where they did Anglo Gold Ashanti. That would be a good model for the way it goes. Like you pick a bunch of targets, you work on that one, but then as soon as you're not working on it anymore, it's dropped, and it comes back to the company. Something like that would appeal to me right now.
Good. Well, so it's a percentage of the upside that you're giving away, like that. You're not looking to give away like 95% or something. Like you're going to stop at like 75%, I assume.
Antonio, I've been on the other side of it. I know exactly what these. My job at BHP was to negotiate with the juniors, so I kind of know what they want. And
what do they want? Tell me more about that. That's interesting.
Yeah, I mean, they'll take as much as they can get, but they usually will come back to 70%. Is probably, if you're smart about it, you usually can get to that, and then you get them to pay an arm and a leg to get that next, because they really want 80%. So it's between 70 and 80 is what they're really going for. They're not interested in anything less than that. But the secret is then to turn around the project. If they're not working on it, it comes back to you. What you don't want to have a situation is that into perpetuity, it becomes like the 70-30, and you're always the 30. You're going to end up going to be diluted out eventually, because they'll increase the size of the exploration spend so that you can't possibly keep up with it, and you'll get diluted down. That's kind of the strategy to a large extent.
Well, how do you protect yourself as a smaller company?
Well, hopefully they have success, and you raise money to equal their success. I mean, it happens all the time, right? But say, for example, they have a very aggressive exploration budget, and you just can't raise the capital. There's no other alternative. You just have to dilute yourself down. So it all depends on the quality of the project that you're drilling. Sometimes you win, sometimes you lose, Antonio. And like I can see several things that we gave away to junior companies that were never big enough for BHP. When I'm talking with my BHP hat on here, they're very happy. They got a great deal out of it. I mean, we just walked away going, you know what? 500,000 tons of copper is not of interest to us, but to a junior company, great, because we turned it back to them. We did all the drilling. We turned it back to them. I'm talking about that one particular thing in Chile. The company did extremely well. That's the way it works. Like you're banking as a junior that they find something quite large, but not large enough for them. Or if they do find it large enough, well, then you're a very small percentage of something Escondida size. That's great. I'd love 0.5% of that. Thank you very much. So yeah, you're playing this game theory all the time in the junior game, right? It's not chess, it's game theory. You're playing poker. You don't know what the market's going to do. You don't know what you're dealing with. You don't know what the guy next door is doing. But you're always having to try and pull your company together in the best possible manner to get the best result for your company. Game theory. I read this book recently about it, and it is very similar. Poker is a very good way of putting it.
Poker instead of chess. That's a very very good way, because chess has
where you're the smarter guy, and you're working out what the guy's strategy is going to be on a chessboard, right? It's two-dimensional. Whereas poker, you have no idea what this guy is holding or she's holding in her hand, and it's all about bluffing to a little bit, right? That's what you're doing when you're negotiating a deal. Sometimes you're bluffing. You think, okay, they've got the data in front of them, but you're still bluffing.
Well, it's also, I suppose, about having the upper hand at times too, because in your case, you have a lot of ground in Tasmania and not that many other options for big companies to do a JV with. So if they want to target this jurisdiction, if you open up the geology and they want to target that jurisdiction with that target geology, then I suppose you're there, right?
Yeah, we'll be in pole position for that. Absolutely.
Yeah.
We got the largest land position as a junior.
Do you think we're going to see more of that? Do you think we're going to see majors or just larger, even mid-tiers, wanting more exposure to Tasmania specifically?
I think it's going to be something that the mid, I'd say that maybe not the $100 million billion plus companies, but I think the smaller ones, there's a whole range, a gambit of them. And look, I've got a list of 100 different companies that are on my hit list, if you like. I would say the top ones, Rio Tinto and BHP. It'd be a hard ask for them to go right into Tasmania right now. They might do. I don't know. I mean, I do have good contacts with them, but they tend to, like at the moment, they're in the DRC, they're in Chile, Peru, the usual, there'd have to be a really good reason for them. But if one of the sort of mid-size senior companies gets involved, yeah, there's no reason why they wouldn't. I mean, at the end of the day, it depends on what the prize is, right? And if you look at it, even when you look at Mount Lyell, which is 3 million tons of copper and what is it? 3 million tons of copper and 1 million ounces of gold. I don't think that's really BHP size. It'd have to be larger than that. That's my point. They're looking for something even larger.
Yeah. Well, looking at the jurisdiction in your permitting process, I also like that part of it because permitting is getting very tough everywhere. Dealing with the community around the projects is getting tougher. You're telling me that's good, not really an issue for you. Well, it's always an effort, but it's not, it's not a non-starter issue like it is with a lot of these places these days. So that's what I like about it. Yeah.
No, it is. And we own everything 100%, which is another key thing, right? We haven't got all these little option deals with all of these different like smaller players. We have it 100%, and we apart from 2 licenses, there's no NSR on any of it.
Yeah. Good. Steve, this has been a good update. Let's not leave that much room between this one and our next update. I'll be on the lookout for your drilling plans and stuff like that so we can jump on and discuss those. Although, even if it's briefly, I'd like an update. But good. Thank you so much for doing this. What am I forgetting to ask you? What else should we be talking about here?
Nothing really. But hey, I just want to say one thing though. There was a blogger on CEO.ca, name's Large, and I just really like his blog. To me, all I want to say is that CopperCorp hasn't lost its mojo. No, if you go on the blog, you'll see what this guy, and I had to laugh, but they were wondering what my accent was. And obviously it was an Austin Powers reference. Anyway, look, I'm super happy about what's going on right now. I'm glad that we got eyeballs on us, and I'm really glad to be talking to you again. The reason we hadn't talked is I had nothing to say, really.
Right. Yeah.
So we've now got something to say, and look, I'm pretty excited about the future for the company right now.
Good. Well, Steve, I'll keep you to those words next time, though. I was just thinking kind of Austin Powers here, as you just said, but hopefully you do indeed have exciting stuff to talk about. And I'll let you do your thing for now, though. And so you can feel free to drop off, as I have another Copper CEO waiting to talk to me, for which I am going to be traveling all the way down. Is it down from where you're? Yeah, I suppose it's down. No, it's not. Anyways, I'm going to Chile from here. And I'm going to be looking at what is Chile's new large-scale copper discovery. And I'm going to be hearing about it from Hayden Locke, the CEO of Marimaca Copper. The company is listed as Mary, so that's Mari on the TSX main board exchange in Canada, where an average of about 9,000 shares trade each day, with a 52-week high of $4.33 and a 52-week low of $2.77. With a market cap of about $405 million and about 100 million shares outstanding today, this is a $4 stock. In total, there are about 16 million options and warrants, leaving the number of fully diluted shares at a little over 117 million. Large shareholders here include Greenstone, who owns about a quarter of the company, so that's at about 25%. Azor now, after recent financing, owns 15%. Itaki Limited owns 12%, and Mitsubishi owns almost 5% of Marimaca as well. The last financial statement, which is dated June 30, shows me close to $20 million in current assets, most of which, so $12.7 million to be specific at the time, was in cash and cash equivalents, as well as over $7 million worth of account receivables and prepaid expenses. No major long-term debt. There is just a small lease liability, noting at about $80,000 in the current liability side of the balance sheet. And there's about $1.5 million that was recorded as account payables and accrued liabilities. Marimaca did close an over $30 million financing, which was within an almost $70 million strategic investment by Azor after the date of this financial report. So the numbers are likely to be different by the time you're watching this. Also knowing, of course, that this is a non-revenue generating company, so they use the treasury to survive and hopefully grow the business. That same financial statement also shows me that Marimaca spent about $1 million on operating expenses over that 3-month period that ended in June of this year. And that's when you exclude the share-based compensation, that's not included in there. That means that that's an average of about $350,000 a month in administrative expenses, with salaries and management fees representing about 1/3 of that. As to the exploration and evaluation expense, the last reported 6 months costed Marimaca about $3.8 million in total, or about $630,000 per month on average. So between administration and exploration, the total monthly spend for the last quarter came in at around $1 million or so, with about a 65 to 35% ratio in favor of exploration expenditures, meaning about 65% of the money went into the ground. As always, though, I would like to remind listeners that this financial statement is nothing more than a snapshot in time. In this case, it is specifically at the end of June of this year, and it discusses the first 3 and then the first 6 months of the fiscal year, which are not necessarily fully representative of how this company operates or is going to operate in the future. Because, as I always like saying, finances are a fluid thing and they do change over time. So it is your responsibility to go to their website as well as setterplus.ca to look at all the numbers yourself and make sure you're getting the full picture by the time you're watching this. That full picture for Marimaca isn't all that complicated, actually, because it is one project that shares its name with the company. So it's the Marimaca project, and it's located in northern Chile. It's somewhere between Mejillones and Antofagasta. This is an advanced stage asset, as the market cap would suggest, with the DFS, so the definitive feasibility study, being expected before the end of this year, and with a targeted operational date set in 2028 for what is expected to be an open pit oxide copper mining operation. The 2022 MRE on the project got updated last year in 2023 to an almost 1 million tons of contained copper in the measured and indicated category, and about 140,000 tons of contained copper in the inferred category, at about 0.5% copper, give or take. But both those numbers are expected to be higher come time for the DFS through the drill bit, with sulfide potential being identified below the oxides, as well as oxide extensions at depth and along strike, with multiple more sort of step-out targets also being on the to-do list for later this year, which I hope is something Hayden and I will discuss in the conversation. The DFS is also expected to show a significantly lower strip ratio, and not only lower, but overall low strip ratio, as the asset actually starts above surface. So it is what we call an exposed ore body containing high-grade zones right from surface, which would potentially help offset and more quickly pay back the initial capex. CapEx, which is also expected to be relatively manageable, by the way, given the extensive met testing that the company has gone through over the recent months, showing that a simple heap leach and a solvent extraction electrowinning processing method would be possible here, which would also add, I suppose, a feather to Marimaca's ESG cap, which is, again, something I hope we can discuss later on, figure out why that's important, or why maybe that isn't. So all in all, it looks like there's a decent project as is. There's infrastructure, there's room for growth. There's a lot of stuff that we can be talking about here, Hayden. But you and I met at the Rural Symposium conference in Florida this year for the first time. But this is your first time on a full scale CEO barbecue, so I will have to hit you with a barbecue special here. But who are you, and why should I trust you with my money?
Yeah, well, thank you very much for the introduction. I almost feel like I don't need to run through anything about the company after such a fulsome introduction. One thing I would note before we move on is, we pride ourselves on the amount of dollars that are going into the ground. The administrative expenses in our accounts include our whole exploration team, which is by far our largest team. And so actually the numbers are slightly higher than what you've outlined there, but it's just a reporting. But we are very proud of the fact that the vast majority of our money goes into value-adding exercises. So who am I? I'm an Australian by birth. I've been working in management of mining companies for about the last 15 years. I started with a company that was an ASX-listed gold explorer and developer called Papillon Resources. My background is technical. I studied electrical engineering and commerce, and then latterly geology. So the objective there was to try and cover at a high level all of the technical disciplines required to understand how to make money in mining. So Papillon was an amazing success. We made a significant discovery, took it all the way through financing and into construction, and then were acquired by B2 Gold. And it has turned out to be a world-class asset. I think that's one of the reasons why people should trust me with their money is I've had success before. I understand what a good project looks like and how to extract value from that. I am, as a result of working for some of the more storied veterans of the Australian mining industry, very, very focused on cost and value for money, which as an investor in junior resources companies, I know I like to see a management team not wasting my money, flying first class, attending every conference under the sun. We like to see the dollars going into things that are going to create value for us. And so really the culture that we're trying to bring is one where we're focused on shareholder returns and delivering value for our shareholders as we march towards production.
Well, you mentioned that you yourself are an investor in the juniors, but then I suppose also in your own company. I didn't see the insider ownership being listed on a presentation. So what is the total insider ownership? How much of that is you personally? And what do you think your average cost of capital is?
So I have I've acquired 70,000 shares directly on market, bearing in mind I came to this company in late 2019, early 2020. My average buying cost is about $3.50 a share. So I'm sort of in for $250,000 directly. If you look at the performance rights that I have, because I think of it as an opportunity cost to me working on this project, I'm probably close to 500,000 shares in total of vested shares. So my total shareholding is a bit over 2 million Canadian. So it's a significant proportion of my net worth. And it's a significant opportunity, I think, for me to grow my net worth.
Given that you joined the company later on, I mean, you didn't get any of the founders' shares and stuff like that. Have you gotten any other incentives? Like, do you or your family own a royalty on the project, or is there a service company, like a drilling company or something else that you own?
No non-arm's length transactions. I have options, shares, and my employment agreement, which is done through my consulting company.
Right. Got it. That's how I like seeing things. I want it to be clean that way. Let's talk about I suppose the main unanswered question in here, if you could call it that, because although it's one asset that we're talking about here, you still have multiple avenues that you can chase from here. Like multiple things are going on, including you working again toward the DFS and doing additional exploration in the meantime. What would you say is the main focus for you, though? Or what are those unanswered questions do you think has the potential to move the needle in terms of share price appreciation the most over the intermediate term?
Well, what I think should have the biggest impact is us getting our project permitted, and we are about to submit our permit applications in the next month and a half. Reality is the market doesn't find that very exciting. So although that is a significant de-risking item, the market will probably ignore it and our share price will probably stay flat, as it has done through various news items that we put out that have been remarkably positive and significantly de-risking for us. So probably the biggest first hurdle is getting that permit application in and our project permitted, which we expect to be done by the middle of next year. The second aspect is financing. So delivering a fully financed, fully permitted project should, in a normal sense, add a significant amount of value to this project. Once again, I expect the market will probably ignore it. I think the addition of Assor as a significant shareholder, along with Ataki, means from an equity perspective, we have the ability to say we're virtually fully financed. Those two groups could fully finance this project themselves. I don't think we'll go down that path. I think we'll certainly give them a significant proportion of it, but we now have a huge amount of confidence that we can finance the base project as it is. And then the second aspect, and really what I think is going to get the market excited, certainly gotten me excited, is the exploration potential, which you've alluded to. We have several projects that we are currently doing exploration work on. There'll be some news out in the near future. We're about to start drilling at 3 or 4 of those projects, and we'll be drilling right until the end of the year. What we're looking for really is complementary resources to the Marimaca oxide project. So things that can feed into the existing infrastructure and extend that mine life or potentially increase the scale.
So all things that I want to discuss later on, including the exploration stuff and a bunch of other stuff. But let's maybe start off with the DFS here. How's that going? Is it looking like it's going to be done on time and on budget?
Yeah, it's progressing well. We said that we would hope to have it delivered by the end of the year, and based on our current timelines, that's still the case. So we'll have the internal numbers, CapEx, OpEx, all of the engineering and design done at the end of the year. And then the actual release date will be just dependent on how quickly we can draft the 43101 documents. In terms of budgets, again, no surprises there. We're tracking as we thought to our budgets with no major variations. So still fully financed to deliver all of that work.
Are you guiding anything in terms of production profile or MPV size or even CapEx size, or is it more of a wait and see approach?
We're giving some rough guidance, and we're saying we think, given the resource expansion, that we should be targeting somewhere around the 50,000 tonnes per annum of copper cathode, for a mine life of at least 10 years, but ideally 12, 13 or 14 years. And that'll be dependent on how much of the measured and indicated resource we take into the reserve. There's a few things that are variables that we haven't yet bottomed out. You know, what sort of recovery profile are we going to lock in based on the assumptions that our operating assumptions that we'll take into the DFS? But that's really a nuance that it doesn't really matter, may impact the mine life by 1 or 2 years if we elect to do a significantly lower recovery to lower our operating costs and or our CapEx. In terms of capital cost, we would expect, and we believe very strongly, that this should be sub $500 million to build this project. So that would put us at the bottom end of the global capital intensity and absolute CapEx for any copper project. There'd be nothing that would compare in the 50,000 tonne range for this kind of production profile. So, you know, I think we're still fairly confident with that. We would hope that it can be well below 500, but 500 is what we're internally shooting for.
And I suppose the payback of that CapEx is also going to be dependent on what kind of recoveries you get out of this, because what you've tested so far as I understand it, is between 75 to 80%. Do you think that's realistic outside of the test environment, sort of in bulk tonnage as well, especially given the variability in your ore composition?
That's a great question. So the average recovery that we previously ran was about 75% life of mine. So that took into account the higher recovery areas and the slightly lower recovery areas. Yes, it's achievable, but is it the most optimal case, I think, is the big question that we need to ask, because what we're seeing from our leach kinetics is we recover a significant proportion of the copper very, very quickly, and then the recovery curve flattens off. But what we do see with the acid consumption is the acid consumption tends to follow a more linear curve, which suggests that once you get to the flattening of the recovery curve, the profitability of each extra pound of copper you recover is reduced. So what we're running now is an economic trade-off. Okay, what's the CapEx implication? What's the OpEx implication? And we're just trying to find a sweet spot which delivers what we want, which is, you know, 50,000 tonnes of copper cathode, decent mine life, manageable CapEx and OpEx.
And I suppose you're starting though with a portion of higher grade and higher recoveries and closer to surface, so that's going to offset, as I said at the beginning, the CapEx potentially more quickly then.
100%. So one of the benefits of this project, and you talk about the payback, is those first 4 or 5 years of mine life, we mine about 60% of the tonnes required to get to 50,000 tonnes of copper per annum, and the recoveries are higher. And so the margins on those first 5 years of production are very, very high. And so the payback period will be certainly sub 3 years. I'd be expecting to be sub 2 years. It'll be quite dependent on copper price assumption. We'll probably use something around the $4 mark. We've seen a few slightly higher than that. We've seen almost none lower than that. So we think 4 is probably the right number for an apples comparison.
Sure. Yeah. Well, I appreciate the sensitivity analyses anyways. But $4 copper definitely seems like I'm bullish on copper myself, and that's something we can talk about as well. But I can see that. Why I'm really asking you these things like that, Hayden, is because I'm wondering what kind of upside I could potentially expect in the stock price. Like if the DFS comes out as you are now hoping or expecting it to, basically, if you answer that unanswered question positively, what is that going to do to your stock price, or what should that do to your stock price in a perfect world?
Well, that's the great question that I have is, and, you know, we look at comparable multiples where things trade. Typically a DFS level project that is, got visibility on its permitting and a fairly high degree of certainty on its project financing, which we almost certainly will if the numbers that we've previously put out are anything to go by, then I would expect you trade at something like 0.5, maybe slightly over of your post-tax NAV 8. And I can say, based on our internal expectations, it's going to be quite a lot higher than quite a lot higher than 400 million Canadian dollars. So we would expect it to trade up significantly. Now, whether or not it does is a function of whether or not people can buy in, institutions are willing to buy in. We're not the most liquid stock, but that is probably one of the reasons why we've traded at a discount to the vast majority of our peers.
What comparables are you using or talking about? Because you just mentioned you use comparables. Who would you compare the asset to?
Well, there's not a huge number, to be fair. But I mean, if you look at the comparisons of copper projects, you have Filo. Okay, well that's trading at, based on analyst consensus, 0.75, 0.8 times NAV. There's reasons for that, obviously. NGX, which is again another Lundin Group company, trading at about 0.7 times NAV. So there's not that many that are in the same position as us in terms of their proximity to production, and so we use those groups as proxies, but arguably we should be trading significantly higher than those groups.
Well, yeah, and I suppose it also depends on what else comes back from the drill bit, which of course we'll talk about later on. Do you think though it's reasonable to expect a buyout before the DFS comes out, or maybe even before an FID is published, in what I would then assume would be sometime next year?
Well, there's been a lot of interest. I mean, look, I'd say yes, there's a lot of groups that would be very interested to acquire the Marimaca project. I think the challenge for us is we're a long way from what we see the intrinsic value of this project to be. And so therefore, it's quite difficult for me as a CEO to say to the board, I think we should accept $500 or $550 million for this project when I believe it's worth well north of $1 billion once you're in production. Now, not to say that in a takeout scenario you get $1 billion. That would be, it happens, but it's pretty rare. But certainly well in excess of 500 would be the price that I think our board would be starting to think that it's reasonable that we would consider selling without going to production. So as a result, and part of the transaction with Assur is that we are very focused on going to production, and Assur is the perfect partner. They have a significant amount of capital available for developing a copper project. We're their first copper project. Itaki is in a similar position. We are starting the process of hiring our execution team, and so you'll see some announcements during the course of September on that. We're starting to build a really good team to go in and execute and become a copper producer.
I'm also thinking, who do you think this asset fits best with? I mean, given the profile that you described here, it is an asset that can fit in many companies' portfolios. Definitely some of the mid tiers even. What do you think? Is that something you can talk to me about a little? Maybe just speculate. I mean, you can, Capstone mining or something along those lines, or like, who do you envision owning this asset in the end?
Well, I would like us to own it. And this is part of the conversation I've had with the board is, this is a pretty, if we take a step back in my career, when I worked at Papillon Resources, we made an amazing discovery, and it was clear it was going to be a mine in a similar and parallel vein to Marimaca. It's very clear the Marimaca project will be a mine, and it's going to be a profitable mine. Unfortunately, we were not prepared to go down the build path when we were at Papillon Resources. That's fine. There are a variety of reasons why you would or wouldn't do it. But as it turned out, it became one of the greatest acquisitions in B2Gold's portfolio. It's worth about 50% of their NAV. It's a multi-billion-dollar company. So arguably, we sold that asset too soon. And while I'm not averse to selling an asset, I also have a long-term memory of that opportunity that was missed. And so I keep saying to the board, I think this is a real opportunity to build a copper company. If you were going to try and start a copper company from scratch, this would be the asset that you would do it with. It's a relatively low risk from an execution and a financing perspective. It's in a tier 1 jurisdiction. It's in low altitude. It's on the doorstep of all the infrastructure and ports. Everything about it is the perfect starting asset for a company like us, not too big. So in terms of, but going back to your question, who would want to own this? Well, 50,000 tonnes is at the small end of what's considered, globally significant from a copper perspective, but it's still a big asset. It'll still do 500 million-ish a year of revenue. It'll do $200 to $300 million a year of EBITDA, we would expect. So it's meaningful for many companies out there, certainly all of the mid-tier. The big question is, who is the most logical acquirer? Well, I think everybody is aware that Capstone Copper has the Mantos Blancos project, which is 20 kilometres away from us. It has 60,000 tonnes of unused SXEW capacity. I mean, they should be buying us tomorrow. They should be moving aggressively and buying us. Now, they have a very big project in Monteverde, which is a fantastic asset. My assumption is they're focused on that. To be clear, I don't think we really looking to sell our asset. What we want to do is build a copper company. But they would be the most logical group.
Yeah, I tend to agree with both of us. I think they think they're the most logical group, and I think they should have bought you yesterday, not tomorrow. So, or when the stock was trading at what I say the 52-week low was uber cheap. But I mean, to each their own. And I suppose obviously all the copper mid tiers, they watch this podcast. It's undeniable. But maybe what they're getting now out of this is that they're going to have to go digging deeper into their pockets. You're not willing to sell cheaper. That's good. And also, I suppose it's a timing thing too, though. That might be interesting to discuss as well. Like, when do you think a right time for a buyout would be of this size? I mean, everyone wants to sell at the top of the market, right? But that's also when capital is easiest to come by, and often where the ROI on that capital is the highest, as in, like, you put money into the ground right now, maybe the market doesn't care. The copper is $10,000. You put money into the ground, everyone cares, right? So, and vice versa. Now is not a great time in the market. Capital is expensive, both debt and equity. So transacting the asset now could again result in you mitigating dilution risk, but it's not an ideal price. So I suppose it's not a straightforward balance, which is what brings me again to that question. When do you think is the right time for a transaction of an asset like Marimaca?
It's a very challenging question. As you say, you want to trade at the top of the market, but I think the mining industry is littered with companies that have transacted at the wrong time. And so, I think there's a lot of caution in big mining companies about doing that, which I would be as well. I think the right time is once we're fully permitted and fully financed. And so we're significantly de-risked from those two aspects. I think then we become a very real opportunity to look at. But then, are we that keen to sell at that point? We've done all the hard work. Now we've got to go into the execution phase, and we think we have the right partners. So it is a challenging thing. I think what we would say, and what I say to the board, is I'm not averse to selling. I'm not so in love with the asset that if somebody comes in and makes what I think is a reasonable offer relative to what the value of this asset is, that I wouldn't say to the board, I think that's the right thing for us to do for our shareholders. But at this stage, we're a long way away from that value. And I think there's a lot of value that we'd be leaving on the table if we did that.
I like that. I like that you're thinking about it that way, where it's not, sometimes I'd interview people and they'd be like, this asset is my baby, this company, I don't want to sell it. I have to develop it at all costs, but that's not always the right thing. So I like your answer there. If you're to do this on your own, though, that you already know that you want to do this as sustainably as possible based on the presentation again that I have here in front of me. I mean, in here you talk about seawater recycling and renewable energy and stuff like that, which all sounds interesting and good on the surface, but none of that, nothing really in the world is without their challenges, of course. So maybe you can clarify or talk to me about where your desire to rely on renewables for energy and recycled water for water supply comes from, as well as what maybe the main risks involved are in doing it that way versus doing it without renewables and recycling of seawater.
Well, so I guess we'll split those into two different aspects. One is water. Now, water, the reason we've done recycled seawater is about risk mitigation. So the area that we're operating in is one of the most arid regions in the world, and mining uses about 50% of all water in that region, which is clearly unsustainable. And our view when we looked at this project early on was it was a fatal flaw of this project. If we were to try to use continental or fresh water, anything that could be potable or usable for agriculture, that we would have absolutely zero chance, and I mean a truly zero chance of permitting this project. And so we started very early on looking at alternatives for how we would mitigate our water risk. So the selection there is, given that we're so close to the coast, the opportunities there were we either build a pipeline and pump our own water, or we look for an alternative source that could provide us with the seawater that we want to use. We examined both in detail, and not impossible, but incredibly challenging, costly, and time-consuming process. Whereas all of these thermoelectric plants have already approved for enormous amounts of extraction to cool their thermoelectric plants. They have an environmental issue pumping that water back into the ocean. And so us taking that water from them was both a solution for them and also a very economic solution for us. So that was sometimes better lucky than smart, I'd say, is my motto. We had a problem, and the most optimal solution for us was the most sustainable solution. On the electricity side, again, I think it's a function of our location. So the Atacama Desert, one of the areas of the highest solar irradiance in the world, it is a real focal point for renewable energy projects. There's a lot of renewable energy, large-scale renewable energy projects that have been built in this region. And they are all looking for industrial scale baseload consumers, of which we would be one. So once again, we examined on-site power generation. We examined batteries. None of them were economically feasible. We are just fortunate to be in a region which is dominantly supplied by renewable energy. And, you know, that part of Chile is the world leader in terms of renewable energy installation.
Is there a risk in relying, and now I'm talking about the water side of things, but it's 25 kilometers, I suppose, that you have to transport the water. Is that a risk? How do you manage it? Is it, I mean, multiple trucks? Talk to me about that whole operation.
No, we would build a pipeline. So the solution that we have is from the thermoelectric plant, we would be inside their fence, so inside the fence of their facility. They would have a outlet valve that would go into a pumping station, and from that point, we would pump into our own pipe, and we would take it up to our site. There are several pipes that go up into the Andes to supply other mines. So Sierra Gorda has a large pipeline. It's about 1,500 litres a second. We examined using that pipeline, and we had detailed discussions with that company about using and tapping off their water supply. But when we examined the pipeline and we looked at their strategy, we saw a risk that they were looking to expand, and the pipeline, given that it's a little bit older, probably didn't have the capacity to go beyond the design capacity. And so we elected to build our own pipeline. So yes, there's a lot of risk. We've taken into account a lot of that risk in terms of how we've approached the development. So another example is two of the thermoelectric plants in the Bay of Mejillones are powered by coal. The remainder are powered by gas. And these are the peaking power stations that feed Antofagasta, but also southern Chile. We saw a risk that in the next 10 to 20 years, the coal-fired power plants would be either closed or reconditioned and refurbished into a combined cycle gas turbine, which would put our water supply at risk. And so we elected to partner with the combined cycle gas turbine. So there's been a lot of consideration about the risks of our development strategy in terms of mitigating that risk.
Yeah, that's an interesting side of the story. I suppose you could truck it too, but that makes it even more risky. You're not that high though. You're I mean, Chile people would expect very high, but you're what about a kilometer above sea level or something like that, right?
Yeah, we're top of the deposit's about a kilometer above sea level. The plant site is about 650 meters above sea level. The challenge with trucking is where we would be coming from an area with people, and what we want to try and do is minimize the amount of truck movements along public roads as we possibly can, because any time that there is truck movements going backwards and forwards, you increase risk of damage, increase risk to your people, but also the operating cost per tonne of water moved is significantly lower through a pipe. Now you have the upfront capex, which is more expensive, but the unit cost per meter cube of water delivered is significantly lower if you use a pipeline and pumping station. So there's that trade-off to consider.
Well, but that capex of the pipeline is included in the sub 500 that you told me about earlier, right?
Yeah, exactly.
Yeah, good. Where do you see do you see other tangible value in this? And I say tangible because I'm thinking about could there be like, are we going to see a green copper price or something like that? Is that something you might in the future take advantage of as well?
It's been talked about, and I think probably 18 months ago, I outlined the reasons for us trying to move towards a more sustainable project in terms of carbon intensity and all of those sorts of things. And the point I always made was it have to be economic, but if we were on the fence and it was unclear which was significantly more economically valuable, we'd always elect to go to the sustainable route. And one of the reasons I believe that is the case is, firstly, yes, I do think at some point, probably not imminently, but in the future, certainly during the life of this project, there will be a price for copper which can be identified to be significantly lower carbon intensity. Groups are trying to do that right now. It's quite a challenging thing to do. But I think as carbon taxes become more prevalent and the price of carbon tax go up, and it becomes more ubiquitous that companies will look to offset their carbon emissions profiles through acquiring lower emission inputs like copper, then I think there will be an increase in price. That's one thing. I think the second aspect is really what we're seeing amongst financing institutions is they've signed up for the Equator Principles, they've signed up for the IFC performance standards, and they've also signed up for these net zero targets, which may be extended. Okay, it might go to 2050 or 2060. But the large-scale financing institutions that are going to provide us with capital are certainly looking at these things. And so if you can show that you have considered it and you've made a marked attempt and been able to achieve, for example, significantly lower carbon intensity, you will likely have access to easier and cheaper cost of capital when you go to build this project. So we think it's important for both of those aspects, in one in the short term and one in the medium to long term.
Has any of that happened to you already? Like, has the way you handle ESG, again, with great detail, been a reason for some of your major shareholders to become that? Like, have any of them really come to you because of how you handle ESG?
Absolutely. Mitsubishi Corp has a focus on low carbon emission copper and sustainable carbon and sustainable copper production. And so that is a key reason that Mitsubishi Corp, the preeminent LATAM copper investor and one of the biggest copper investors in the world, invested in Marimaca. So yes, we've seen it already. That was very much on an equity standpoint, but in all of our conversations with the banks that we have regularly, now that we're moving towards the construction phase, they are very focused on the sustainability of the angle, and carbon intensity is one of those. The water is a huge thing for them. You know, we're focused on recycled seawater. How we engage with our stakeholders. We've just done a voluntary community consultation process. It's not required in Chile, but we've done it. So they'll be very focused on all of those sorts of things because we're trying to be a responsible mining company.
Mm. With those consultations that you're doing, what's the local population telling you in terms of labor? Like, is it looking like they're very much going to be involved in it? Are you keeping certain percentages for yourself where you're like, oh, I want to have at least half of the laborers at the mine be local, or like, how do you deal with that?
So we have there's not a huge population around us. So we have Antofagasta, which is a large regional city, and then Mejillones, which is the port, which is 25 kilometers away. Mejillones is a relatively small town. But yes, our community consultation, our open house that we had was all about what opportunities will there be. And although we won't make it a specified percentage, our preference is to have our workforce live in Mejillones and Antofagasta, and we will, rather than fly in, fly out, they would be based in Antofagasta and Mejillones and bus in and out of the project, so that we are supporting the local workforce, the people who are originally from this area. In an ideal world, we would have, 99% or even 100%, maybe I become superfluous at that point, but this becomes a Chilean copper company with the vast majority of people working on the project from the region where the project is operating.
Are there any risks related to that as well in terms of politically? Again, I don't expect it to be, but it's almost like you have to ask about these things these days because a lot of them happen unexpectedly. I know Chile is a well, very copper friendly and mining friendly jurisdiction overall. But yeah, what's happening in your conversations with government officials, and how do you see the political situation?
Chile is a tier one mining jurisdiction, so it's very, very mature. It's the industry. It's the leader in LATAM. So, you know, it's not like when I was operating in Africa, where it's very much what can you do for us if we're going to get this mine approved, and there's a much higher expectation that we will provide a lot more for the sort of local stakeholders. But that being, and also there's a huge skill base in Chile. I mean, this is one of the leading copper miners for the last 50, 100 years. This is a significant producer of copper. And so there are a lot of people who've been working in this industry a long time. So the skills are amazing. One of the biggest challenges I think we would face is just the highly skilled workforce, i.e. the trained mining engineers and trained geologists and trained metallurgists may not be available in the Mejillones area. It may be that they have to go to Antofagasta. It may be that we have to go further. It depends on the challenges that we face. But certainly the senior management levels, those people have tended to work offshore. They may be based in Santiago. They may not be willing to relocate. But I'd say that's more of a skill issue rather than where are you going to source your skills from? I don't think there's any need to source expat skills. And to be clear, we operate in Spanish. So expats would have to speak Spanish if they're going to come in and work in Chile with our team. And I don't think there's any need to go offshore other than for very specific sort of optimization skill bases. But other than that, no, the Chilean government, there's no restriction on people coming to work in Chile. There's no restriction on us employing whomever we want. But I think we will always err on the side of Chilenos or Chilenas as part of our team.
I did notice that on your website. When you open it up, the very first thing that you see is actually in Spanish. So I thought that was kind of cool. What else in terms of operations? Because I do want to move on, talk about exploration, but what else am I forgetting to ask you when it comes down to operations? What I don't know, what keeps you up at night? What are you thinking about?
Definitely building out the team, because what I know is competent people are very hard to get, and when they're found, they are often, brought in. So First Quantum is a great example. Amazing execution capability, but those people just stay at First Quantum and they never leave because First Quantum treats them well. And so what is keeping me up at night is trying to build an owners team that can execute on this. So going back to my original point, which was to the board, we may sell, but we have to be prepared to build. And so therefore we need to build the owners team that can do that. So that's one of the things that's keeping me up at night. The permitting, I'm confident, but you never know until you actually submit your permit applications, what the unknowns are. So we're waiting to submit our applications, and then we'll, hopefully we'll have done enough preparation work. I do think we've done a lot of preparation work, but I still am, worried about what we might have missed. It's always concerning when you're in a position like mine, when people can't tell you what could go wrong, that, I worry that we've missed something. So I'd say those are the two major things. For the first time in my career, I'm probably not as worried about financing because we're in a tier one jurisdiction. Copper is going well. We know there's a lot of money available for copper, as evidenced by the 3 investors that we now have controlling, a significant proportion of our register. We're in a really good position from a financing perspective, and we know the banks are there. So I think it's really those two.
What exactly has to happen in terms of permitting before you can actually produce the copper? I know there's a few steps. Well, what's the exact process?
Yeah, there's quite a few, but the main one is the environmental approval, which is, I think, the world over now, mining is driven by your ability to get the environmental sign-off. And I think that's driven largely, the reason we say we're so much lower risk than many other mining projects is because of our location. We're in the Atacama Desert where there's no flora and fauna. There's no people using the land to grow food. There's no indigenous populations that have used this land for 1,000 years. So we're not impacting anyone significantly. And so as a result, we should be considered to be lower risk. It doesn't mean that we're not focused on being net zero impact on the environment, but it just means that there's so many fewer variables for us to consider. So the environmental approval is the key. Once you get the environmental approval, then you go through the process of getting all the other permits which are required to commence construction. And then there's different permits once you're in operations. I often say permitting for a mining company never ends. So you start your permitting process and then you're constantly renewing or monitoring your adherence to, or applying for new permits, or insert new permit. There'll always be some aspect of permitting that needs to be taken care of for a mining project.
Maybe you can talk about what else you have to do. Do you have to permit anything in terms of exploration, or can you just go and drill what you want to drill?
It depends on how many platforms, so how many drills. So if you go out and start drilling, that's fine, up to 40 platforms. So you can prepare 40 drilling platforms, and you can drill as many holes as you want from those 40 platforms. Once you've done more than 40 platforms, you then have to do an ESIA effectively. So we've been through the environmental approval process, and we've submitted, and we've received our environmental approvals to expand the number of permits. So we're now permitted for over 300 platforms. But yeah, as a general rule, the government tries to encourage exploration, and actually the government tries to encourage artisanal mining. So you're allowed to mine, I think it's up to 10,000 tonnes of ore a month without a permit. So once you get into the big scale that we're talking about, that the environmental approvals become important.
Would there be anything to be done in terms of a collaboration with the artisanals that are mining someplace else, but they want to process it with you, or use some of your know-how, or is there potential for collaboration there?
Absolutely. And it happens quite regularly, although most of the artisanals tend to sell their product through ANAMI, which is the state-owned enterprise, which buys the ores from them. There is absolutely opportunities to collaborate. Whether or not it makes sense in terms of the scale that we're talking about relative to the scale that they're talking about remains to be seen. But I'd say, during the exploration process, we had artisanals on site doing work under agreements with us. So we were allowing them to go and exploit areas at surface. And our view was it provides a livelihood for them, but also provides us with geological information that could be helpful for exploration. So, I think we've got a good relationship with most of the local miners. In fact, 2 of them are our main partners on the Marimaca project from when we acquired it. So yeah, we know them all pretty well.
It's very cool to see, actually, when the artisanals get in there, and then oftentimes they open up a lot of the geology. They have a benefit from it. The company has a benefit from it. It also strengthens the relationship for future endeavors. So that's very cool. That's where I asked about it. Yeah, do talk to me about exploration. You said you mostly focusing on the oxide stuff, but I did read something that you wanted to drill deeper, see what's happening with the sulfide. Talk to me about what exactly you want to do.
Yeah, so the sulfide is a challenging one because we've had some amazing drill results in the sulfide zone. There was one that was a bit over 100 meters at 2% copper. And we went back and followed it up, and it was a technically challenging drill program as a result of me trying to preserve cash primarily. And that's primarily because the geometry of the ore body is such that in order to properly test the depth extensions, we should be stepping out to the eastern side of the project, which is on the top of a hill. So we would effectively be drilling 700 meters of barren material before we got to the interesting area. Each of those drill holes would be somewhere between $350,000 and $500,000. So very expensive for a group like us. We've got plenty of money now, but it's an expensive drill program for something that, even if it was an amazing project, is not going to be developed until after we develop the oxide. So from an NAV perspective, it's not very high value. And also, there's no guarantee that we're going to be successful. When we were looking to try and expand the resources in 2021 and 2022, we made 3 shallow oxide discoveries. So we know that there are a lot of shallow oxide, complementary oxide materials that can fill our mine plan. And so really that's our focus. The exception to that is the Sierra de Medina project, which is up in the north east of Marimaca. It's about 25-30 kilometers away from Marimaca. That is a very interesting project in that it is a very different scale of opportunity. So in terms of the Manto-style deposits, Mantos Blancos being the key one, it's the really old, largest discovery in this region. everything in the low coastal range would have been generally accepted to be quite small, relatively good grade. So 30 to 50 million tons at 1%. Mantos Blancos is, I think it's been mined since the 1950s or 60s. It's probably mined 200 million tons at 1%, still got another 200 million tons at 1% to go. So it's a big deposit. And it was an anomaly in terms of copper production for about the last 50 years until Antofagasta made the Cachorro discovery, which is a very large scale manto style deposit. It's about a bit over 300 million tons now at 1%. They're expecting it to be 500 or 600 million tons at 1%. So it's going to be a significant new discovery. And as fate would have it, we control most of the land package between Cachorro and Mantos Blancos. So we've spent a lot of the last 12 months going back through the historical data that we've got on those land packages. We've been out doing surface work. We've got some very interesting stuff. We're just in the process of acquiring a couple of new projects. And once we've done that, we will commence drilling. The scale of opportunity there's twofold. One is shallow oxide deposits, like Marimaca. So these are volcanically hosted oxide deposits that could complement. And then the second portion is really the Cachorro style, Mantos Blancos style, a couple of 100 million tons of much higher grade with some silver or some gold. And we see several opportunities to make those sorts of discoveries. And we'll start, as I said, drilling ideally in the next 2 or 3 weeks.
But you do expect that the potential ore body that would be at Sierra Medina to have the same composition, or the mineralization to have the same composition as what you have at Marimaca?
Same oxide zones. And what we've seen, certainly in one of the deposits, so we have several deposits on the site, none that have been really drilled extensively. They have a bit more chalcocite, primary chalcocite, which is a really interesting sort of much more akin to Mantos Blancos and Cachorro. We've seen some precious metals, which we don't have any of at Marimaca. But yes, in terms of the oxide minerals across this region, in terms of their oxidation profile, tend to be very consistently atacamite, brockentite, chrysocolla. So we see quite a lot of similarities between these deposits in terms of the oxides.
But you still do think that the Red Hills is acting as the heat source here. So that's what's going to be guiding your exploration forward, I suppose.
Sorry, I missed that.
Oh, well, you're still dealing with the assumption that that Red Hills is acting as the heat source on this project. That's what's going to be guiding your exploration forward, I assume.
Yeah, so there are the things that we're looking for are the large scale plutons sitting below. So below Marimaca, the Naguayan pluton, the intrusive, the large scale heat source that sits well below it. We have several of those in the area between Mantos Blancos and Cachorro. Interestingly, what we're looking at for Cachorro is an andesitic volcanic unit overlying a sedimentary sort of interbedded sandstone and shale zone with a tuff at the bottom, to get very technical on the geology. And interestingly, for the first time, the geology at Cachorro is indicating that copper mineralization is being hosted in these sub-levels, which are sedimentary, and the tuff hosted, which has never been tested in the Sierra de Medina region. So that's where the big prize is. But in terms of the oxide mineralization, we're looking in the upper levels.
Okay. So, but you still rank Sierra de Medina way higher than Mercedes or Cindy?
Certainly higher than Cindy. Mercedes I absolutely love. And it's not going to be another Marimaca, I don't think. I could be wrong. But what it is very shallow, decent grade, and it's less than a kilometre to the north of the Marimaca oxide project. So I see it as offering very, very low risk, low cost additional infill to try and bulk out our mine life, either increase our mine life or increase our overall production. So Mercedes will be drilled, but I think in terms of the really game-changing potential, Sierra de Medina has several opportunities for discoveries that could be game-changing.
Well, when you say it will be drilled, what kind of timelines are we talking about here? Well, you kind of mentioned the timeline on Sierra Medina, not specifically, so maybe you can talk to me specifically what month, when do you want to go there? But also, yeah, Mercedes, when do you envision it being drilled?
So the rigs have been mobilized, so they should be on site in the next week or so. I actually haven't. I'm down there next week, so I'll catch up with the geologists and find out exact timings. But they'll be down first week of September. The rigs should be on site. The first target to be drilled will be one of the Sierra de Medina targets, which is called PS, which we released a note on a while back. That is a very large scale target and an enormous geochem anomaly now. That's over 5 kilometers long by 400 or 500 meters wide. It dwarfs Marimaca, to put it into context. It's significantly bigger than the Marimaca anomaly. So that's the first target. The question with a target of that size is how do you do it properly while preserving your budget and giving yourself the best opportunity to hit something. But we'll do a first pass drill program, a couple of 100-meter drill holes at PS, and then we'll move to Mercedes. And we're doing road cuts at Mercedes at the moment, which is beneficial to both access the areas where we want to drill and prepare the pads, but also to expose some of the bedrock and do some geochem sampling. And then, so I would expect we'll be done drilling PS by the end of September. We'll be drilling Mercedes in October. As soon as Mercedes is finished, we'll go back to drill the core project of the Sierra de Medina project, which is right in the middle near where the other deposits are.
So news timeline from there, 6 to 8 weeks from the end of September?
I'd say we'll be getting our first drill results back towards the end of September, start of October, and then they'll continue to flow probably every 2 to 3 weeks, maybe 4 weeks, until the end of the year or early next year. The lab turnaround times are pretty good at the moment. Our team's exceptionally good at getting things off to the lab in batches, so I think we should see pretty solid news flow from October onwards.
Right. How much money do you think you're going to be left with at the end of that program?
Well, we have 12, let's call it 13 million in the bank, and we've just raised another 22 post fees. So we're only the total budget that we're signing off for this is slightly less than 5 million for a first pass. So we've got plenty of money to achieve everything we need to do and get to financial close is our current view. So we're fully funded to progress the Marimaca project, to get ourselves to a point where we're permitted, funded, ready to go. And we just need to do the big capital raise, and we've got plenty of money to take care of the exploration. We also have some receivables that are owed to us, which they need to be restructured, and there's a bit of doubt around that. But if we manage to restructure that, we'll get that during the year. That could add another couple of $1 million to Sergio's exploration budget. So I think we're in a very good position.
Isn't that $10 million or something along those lines? Or 10.5?
It's so 7 million is owed to us for the Ray Rock sale.
Yeah. Okay. What would restructuring look like? What's the chance you get that money back, or at least part of it?
Well, we're completely secured over the asset, and we're completely secured over the shares of the company. So it's any liquidation that occurs of those assets or any sale that occurs, we have first lien rights over any money that is realized. So the question is not whether or not we get some money; it's about the timing of getting some money. We have had a couple of false starts. It's not a focus for us, but I think there's a good chance between now and the end of this year we'll get some money out of that.
And you said, would you say 23 from the recent raise after fees? Didn't you raise 30? Was that $7 million in fees?
30, sorry, I'm talking US dollars.
Oh, okay. So you raised Canadian 30.
Canadian 30, it's about 22, 23 US.
Oh, okay, that makes sense. Yeah. I thought it was $7 million in fees, and I thought, oh, damn, I'm in the wrong business. I should be in whatever that business is.
No. Fees were less than 2%.
Yeah, good. Yeah. Okay. So, well, I think we've been through most of the stuff on the exploration. What am I forgetting to ask you on the exploration end?
No, I don't think there's anything. I think we're excited about the potential. And I think that's the thing that really sets this story up for hopefully, but regardless of what happens, if the exploration goes well, then we're trading at a ridiculous discount. We think we're already trading at a ridiculous discount, and we think the DFS will show people that this project is still a standout and still has some of the best economic metrics. And we're excited about what the future holds.
Good. Well, Hayden, all the questions for now. Hopefully we can get an update in the future, especially with that exploration. That'd be good. But I think I'm out of questions for now. Thank you so much for sitting down with me. This was a pleasure.
Amazing. Thank you.